Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. I'm Amy Morris. Salesforce is rising on cloud potential. Morgan Stanley analysts predicting that the artificial intelligence wave will help propel the software maker's shares to record levels. Shares of Salesforce now about a little more than 2% higher. We do check the markets for you all day long here on Bloomberg Radio. S&P 500 up 0.8% or 41 points. NASDAQ up 1% or 148 points. And Dow up 0.7% or 281 points. The 10-year Treasury yield at 3.87% and the 2-year yield at 4.34%. NYMEX crude oil trading at $73.59 a barrel. That's down 63 cents. COMEX gold at $2,052.10 an ounce. That's a gain of $4.60. And that's your Bloomberg Business Flash. Bloomberg Markets continues now with Paul Sweeney and Emily Grafeo.
All right, Emily Marsh, thank you so much. We appreciate that. Emily Grafeo, Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio, and we're also streaming live on the YouTube thing. That's the internet, Emily. Okay, you familiar with that?
I think so.
The intraweb. Okay, youtube.com. You can search Bloomberg Radio. All right, one of my all-time favorites is here. Emily, you don't know this, but Ann Maletti, head of active equity at Allspring Global Investments, joins us here for, get this, like Menominee Falls, Wisconsin or something? I don't know. But I went out there one time about 25 years ago, and I keep going back. So, and thanks so much for joining us here. Boy, this last, I don't know, 6, 7, 8 weeks, it's been such a move in the equity markets, in the Treasury market. You know, you've seen this come and go a million times. What do you make of the last 6, 7, 8 weeks?
It's been a wild ride, Paul, and thanks for having me on. It was really nice to be on this week and wish you all a Merry Christmas and Happy Holidays.
Likewise.
So thanks for having me back. Look, it's been a really wild ride, and we are getting that Santa Claus rally, certainly a little bit even early, but there's a lot now with the rally that we have that maybe took a little bit away from what we thought might happen in 2024. So I think now's the time to be a little bit more disciplined about the way we enter the year.
And I had the wonderful opportunity to actually meet you at your Outlook event a few weeks ago. And I'm wondering if after that Fed dovish pivot, you had to change anything from your 2024 outlook.
Well, Emily, as we talked then, it was interesting because a lot of the things that we were pointing out is where fundamentals were pointing us for 2024. And as soon as Powell kind of said the Fed put is back on, those things really started to ramp up. Areas like small cap, right? It's an area that we've been looking at really closely for the last couple of quarters at least. The market really hasn't been paying that much attention, but that's where our investment teams saw a lot of value. And as soon as it became clear from Powell that, look, rates are going lower, that area of the market really, really lit up. What I would say, though, Emily, is where we probably want to be a little bit more cautious is the type of small cap stocks that investors enter into. There still are a lot of small cap names that don't have the best balance sheets. We're more interested in quality and looking at small cap stocks that have free cash flow, that have better balance sheets, those names, and margins, obviously, too, maybe the margins above 20%. Those were the names specifically that we were calling out that are durable and can last whatever we do see in 2024.
Hey, and one of the things that had, I think, concerned investors, certainly for the first maybe 9 months of this year, was the lack of breadth in this market, the Magnificent Seven driving most of the performance. But that seems to have improved a little bit. We've had the Russell 2000 really outperforming over the last couple of months. How do you think that's going to play into 2024? Or you think you'll see some continued improvement in the breadth out there, or should I just jump on the Magnificent Seven for next year?
Paul, it's so interesting because, as you and I both have been trained over time, fundamentals really do matter. And it was, as we really dug in, and I did a lot of work on this, the Mag 7 really did generate good returns in 2023 because they had really good earnings relative to the rest of the market. And so, okay, I'll give them that. But when you look at the 30% plus earnings growth that many of the Mag 7 had, at least 5 names out of Mag 7 grew earnings over 30%, many over 40% in the third quarter. It's going to be really hard for them to top those. Compares now become very difficult in 2024. So I think we were also saying where our compares are easier. And again, that showed us where the breadth of the market could be in 2024. That pointed to areas like small cap, but also areas like healthcare, where earnings growth appears to be the best almost of any other sector. As I look to 2024, 20% or more earnings growth. Look, it wasn't great in 2023, but we think the prospects there are pretty good in 2024. So driven by fundamentals, we think the breadth is going to be much broader in 2024. And, not that the Mag 7 are bad. It's just that the chances for them to top that growth rate is going to be a little bit more difficult.
So then what does it tell you about the market that we're in, that people are still buying the Mag 7? You look at ETF flows, we saw a record inflow into SPY, S&P 500 ETF last week, $20 billion in. It looks like stocks more broadly, and a lot of this is coming from large cap, $69 billion into equity ETFs in December. That's the best month since 2021. What do you make of that, I guess, euphoria, just piling into these large cap stocks? Or should people be pivoting into other areas then?
Well, we personally think they should, Emily. And I think, sometimes, and look, I think investors, generally speaking, are very, very smart. But one of the things that has gotten disjointed is this heavy overweight in these Mag 7 stocks. And so, when you're buying an index, when you're buying the Russell 3000 growth, when you're buying just the Russell 3000, when you're buying the S&P, you're buying the most expensive names, and you're buying 30-40% of those names and much less of any other. And so while you might think you're diversified, you're buying, very chunky portions of a few names and very few of the others. And so, we think taking a much more active approach and having fewer names, but owning a broader portfolio makes sense at this point in the market. And we think returns can be better. Now, it's not surprising to me that those ETF flows are going there just because of the structure of the indexes, but we think it should change, and we think it will change when the performance of the other names starts to show that they can produce the fundamentals that I talked about earlier.
Hey, Ann, how about valuation here in the market? We've had a big move higher. I'm not sure we've necessarily had a commensurate increase in earnings here. How do you guys think about valuation here?
Yeah, that's what makes me a little bit nervous, Paul. Certainly I can point to the 493 names that aren't as highly valued as the overall market, but I do think we do need to see some catch up, and we do need to see the fundamentals play out. And so, I don't love the fact that we've had this really strong rally here, and I do think we're entering 2024 with a much foggier environment. Yes, inflation has come down, but we have problems with the Red Sea right now. The geopolitical risks as we enter 2024, you could say, are much higher than when we entered 2023. It's a political year, an election year. Now, typically those end up being up markets, but typically also pretty volatile. And so I think, it's going to be much more challenging than investors believe today. That being said, we think we'll end up having an up year, but it's not going to be up, double digit. We think it's going to be kind of up single digit, maybe high single digit, but expect it to be a rocky one.
What's the biggest macro risk for next year that you don't think enough people are talking about?
Yeah, I still think it's geopolitical, right? We're definitely focused on interest rates right now and whether the Fed gets it right or wrong, and whether we have a soft or hard landing. But it's always Paul probably would also agree with this. It's never the things we spend the most time worrying about. It's the big surprises that come out of nowhere that really have the most dramatic impact to the market. Mm-hmm. And so, it seems to be that probably a geopolitical risk, but maybe one that we're not even considering today.
And as always, thank you so much for joining us. That is the great Anne Milady, head of active equities at Allspring Global Advisors. And I've said it before many times, and I'll say it again. Pound for pound, I think some of the best investors I've ever come in contact with over my career are in Milwaukee. I don't know why. Maybe it's the great University of Wisconsin. But boy, there's just so many firms, large and small, in Milwaukee that have some really smart investors and have really good track records over a long period of time. So you wouldn't necessarily think it, but I'm telling you, Milwaukee's...
Maybe I have to take a reporting trip there.
Absolutely. It's a great town, great folks, and some smart people. S&P 500 up 0.75%. The NASDAQ up 0.8%. But once again here, talking about that broadening out of the participation, we've got the Russell 2000 up 1.1%. We're now over 2,000 on that Russell 2000 index, 2005, up 1.1%. Yields kind of steady here. 10-year Treasury, we are 3.86%. I'm going to call out WTI crude oil because we've been talking about that for a while. It's down 0.7%, $72. Right now, let's head down to Washington, D.C. We'll get world and national news. Actually, we're going to do that in New York. How good is that? Michael Barr in studio, even better.
Thank you very much, Paul. Emily. The U.S. has freed close ally of Venezuelan President Nicolas Maduro in exchange for the release of 10 Americans imprisoned in the South American country and the return of a fugitive defense contractor. The contractor, known as Fat Leonard, is at the center of a huge Pentagon bribery scandal. The American detainees were back on U.S. soil late last night, including Savoy Wright, who says he is forever grateful.
I didn't know if I would ever make it out. And it's really scary to be in a place where you're used to having freedoms and you're locked into a cell.
The largest release of American prisoners in Venezuela's history comes weeks after the Biden administration agreed to suspend some sanctions. Donald Trump's legal team is urging the Supreme Court to hold off on intervening in his election obstruction case. Bloomberg's Ed Baxter has the story.
This is the case brought by special counsel Jack Smith, saying Trump conspired to overturn the 2020 election. Smith requested the consideration of Trump's immunity claim, seeking to ensure the trial can start on March 4th. Trump's lawyers are arguing there has not been identification of a compelling reason for the, in quotes, extraordinary haste he proposes. Trump has long said he wants the cases put off until after the 2024 election. This is the first Trump criminal case to hit the Supreme Court, and the court could rule as early as this week whether it will hear it. Ed Baxter, Bloomberg Radio.
Czech police say a university shooting in downtown Prague has left several people dead and wounded. The suspected shooter also dead. UK Foreign Secretary David Cameron called for a pause in fighting between Israel and Hamas in order to allow hostages out and aid to be brought in. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it's 10:40 on Wall Street. Green on the screen this morning after better than expected economic data did little to challenge expectations on prospective interest rate cuts from the Federal Reserve. Weekly jobless claims came in at 205,000. That's below estimates. Bloomberg has also learned Warner Brothers Discovery held talks on a possible merger with Paramount Global, potentially combining two of the biggest media companies in the world. Bloomberg's Felix Gillette has those details.
Talks between Warner Brothers Discovery and Paramount at this point seem very preliminary, but something's going to happen. I think this will bring other suitors to the table.
Gillette says this is just a preview of what we're going to see next year. Shares of Warner Brothers Discovery now down more than 4%. We check markets for you all day long here on Bloomberg Radio. S&P up 0.7% or 35 points. NASDAQ up 0.9% or 131 points. And the Dow up 0.6% or 229 points. The 10-year Treasury yield at 3.86% and the 2-year yield at 4.33%. NYMEX crude oil trading at $73.72 a barrel. That's a drop of 50 cents. And COMEX gold at $2,051.30 an ounce, a gain of $3.60. And that's your Bloomberg Business Flash. Now more Bloomberg Markets with Paul Sweeney and Emily Graffeo.
All right, Amy Marsh, thank you so much. We appreciate that. Emily Graffeo, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so head over to youtube.com, search Bloomberg Global Radio. 2023 done. I think we did okay. I mean, at 401k, should be pretty happy.
Yeah, really defying expectations this year. That was a big theme.
You know, maybe one of the few nuggets I've left to my children here is now that they're all in the workforce, maximize your 401k, and they'll be very happy this year. Lorene Gilbert joins us. She's the CEO and founder of WealthWise Financial Services. Lorene, thanks so much for joining us. For those on YouTube, you can see Lorene's beautiful Christmas tree in the background. So you're definitely in the spirit.
Thank you.
We appreciate that.
Trying to be. Yes.
Lorene, what are you telling your clients these days? I mean, it's been a great close to 2023. What's the message you're giving your clients for 2024?
Well, speaking of the Christmas tree, we still have a potential Santa Claus rally that could continue this rally in the markets, and we believe it probably will. What we're seeing right now is a broadening out of the market versus earlier in the year where we had the Magnificent Seven, and that was all the rage, and now there's more of a broadening out of the market. And so what we're saying in 2024 is 60-40 is not dead. You'll remember that a lot of people said the 60-40 portfolio was dead. It is alive and well in 2024. I think we're going to see bonds doing well, equities doing fine, not without some volatility in the markets, but at the end of the day, we see good things coming around in 2024.
Okay, so bonds doing well, equities doing fine. Is that a 60-40 outlook? Is that still the, portfolio construction that you're telling clients to be in?
Well, so we manage everything from very conservative, 100% in fixed income, to aggressive, 100% equity, and everything in between. But for most people, when you're looking at allocation, there's going to be some combination of fixed income and equity exposure. And so finally, the bond markets are acting like bonds once again, which is positive for those bond market investors. And equities, we still believe, have room to run in 2024. So that's why I say the 60-40 is back for those people that want some kind of diversified allocation.
So, Lorene, what type of sectors are you suggesting, or what kind of strategies are you suggesting on the equity side that your clients pursue in 2024?
Yeah, so of course a diversified portfolio, and then looking for areas in the market where we see additional opportunities. We do think industrials is a good place to look. We've been invested in utilities in this latter part of the year that we think will continue to be a great sector to be in as well. And then the area that has been overlooked is small caps and even mid caps. And of course, we've seen that in this last month, a huge rally there, but we still think there's additional opportunities. So not forgetting to invest in the small mid cap area in addition to your large cap stocks.
I'm wondering, You know, we've had a number of guests, Paul, talk about small caps.
Yes.
Can you just describe what is the macro setup? What kind of macro outlook do you have to have for 2024 to be adding money to small caps right now?
Sure, and that's all about the Fed. And the market right now is all about the Federal Reserve and the anticipation that rates are going to come down in 2024. In fact, the market is pricing in 75 basis points in March. And of course, we've heard a number of Fed representatives try to push back against that, saying, wait, maybe that's not going to happen. But in fact, that's what the market is pricing in. And so with that, it makes small capitalization companies have easier access to credit. Those are the companies that have a harder time accessing credit and are more interest rate sensitive. So when interest rates are high, it can be a huge headwind to those companies. And with the idea of interest rates coming down, there is a boom there as well.
Lorraine, how do you use ETFs with your clients? It's become such a big part of the investment discussion really over the last 10 years or so. How do they fit in with your portfolios with your clients?
Yeah, ETFs are a great way to be exposed to an overall index, as it were. So oftentimes in large cap, large capitalization companies where we want to just capture maybe all of the S&P 500. We'll also use it in certain areas where we're trying to add some alpha in a sector or an area of the market where maybe we don't really know who the winners are going to be, but we want exposure in that area. And so we will invest in that way. So just like I was saying, some of those sectors that we talked about, those might be good ways to capture an entire sector.
Are clients asking at all about alternative strategies, maybe outside of stocks and bonds?
So of course, we are a big proponent of alternative investments and everything from, publicly traded alternatives, as well as more in the private markets as well. So all kinds of alternatives are a good idea to add. The real question is how much in your alternatives. And many times alternatives don't have the liquidity features that your publicly traded stocks and bonds do. So you have to be careful with that. So not overreaching in the area of alternatives. Our clients do know about it. They ask about it because we talk about it. And we look at around 10 to 13% in the alternative space, just depending on asset allocation and liquidity needs or whatnot.
Lorraine, I know you've been very active during your career with the National Association of Women Business Owners. In the financial services industry, how's that going?
Well, we still have room there to improve as far as women being in this industry, really as leaders. But I will say what's fascinating to me is even though we make up a smaller number in financial services, those women who are in the industry tend to excel. And so that's the story, of course, to the younger generations is, look, there's a great opportunity in this industry. You can do very well. I'll be teaching a class in January at the University of Texas, my alma mater, talking to Hook. I'm really excited about upcoming games here. And so talking to these, many of them women, saying, look, wealth management and financial service is a great industry to be in. But what I'm seeing, though, I will say, is that I'm now an acquirer of practices, and most of the sellers are men in the industry. And so trying to talk to the men about, hey, you really should consider selling your practice to a woman. That's really a good way forward.
All right, Lorraine, thanks so much for joining us. Really appreciate it. Lorraine Gilbert, she's the CEO and founder of WealthWise Financial Services, giving her thoughts on these markets here, which has been a great year for the equity markets. It's a positive year for fixed income across the board, particularly if you're in high yield. That's where the real double-digit performance has been in 2023. So again, the fixed income space was struggling through really September, and then has had a really, really strong fourth quarter to put out some positive year-on-year gains after a disastrous 2022 in the fixed income space. Today, finishing strong here, we have got the S&P 500 up 0.75%, the NASDAQ up about 0.9%, and the Russell up 1.2%. Yields are steady. 2-year is up it's pretty flat, 4.33%, and the 10-year, 3.87% on your 10-year Treasury. More coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Hey there, Paul. Micron delivered a strong forecast thanks to data center demand from the AI boom. Bloomberg's Ed Ludlow points to the outlook for the fiscal second quarter.
$5.1 to $5.5 billion above street estimates, beating on that forecast. On the bottom line as well, expecting a loss of 21 to 35 cents per share. The street was seeing a loss in the fiscal second of 62 cents per share.
Micron up about 7%. Citigroup has decided to exit the distressed debt trading business. It's the latest effort from CEO Jane Fraser to reshape the firm in hopes for higher returns. Bloomberg's Catherine Doherty has more.
Citi, their decision to do this, they're just showing that they're going to put all of their resources elsewhere. So they still have high yield credit trading, and that likely will remain. But distressed debt is a very specialized part of the credit market.
Citi up about 0.5%. Barclays has delayed its bonus pool decision for this year after top investment bankers asked for more time to reflect business they won in recent days or expect to win. Sources tell Bloomberg they argue that capital markets activity has been picking up and the bonus pool should reflect that. Barclays ADRs are up about 1%. And Wells Fargo has become the first major American bank with a unionized branch. Workers at a small branch office in Albuquerque, New Mexico, voted to join the Communication Workers of America's Wells Fargo Workers United. Now, branches in Daytona Beach, Florida, and Atwater, California, have also filed to hold elections. Wells Fargo is up just about 0.1%. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, a solid day in the markets here today. The S&P 500 up about 0.7%. The NASDAQ up about the same. The Russell up 1% here. Yields pretty steady here. 10-year Treasury 3.88%. On the commodities front, WTI crude oil off about 0.9%, $73.50. Gold higher again at $2,041 per ounce. And Bitcoin a little bit higher here, 43,700 on Bitcoin. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Emily, all 10 Americans detained in Venezuela and exchanged in a prisoner swap are now back on U.S. soil. The U.S. secured their freedom by granting clemency to an ally of Venezuela's president. 6 of the Americans landed at Joint Base San Antonio last night. One of those released was Evan Hernandez. He spoke to reporters at the Joint Base Airfield.
All you think about when you're in prison is how you didn't appreciate being free while you were free. There's no way to understand what it's like to be in prison unjustly.
They will be evaluated at the Brooke Army Medical Center. Also in the prisoner swap, the notorious figure behind one of the military's largest corruption scandals, known as Fat Leonard, is back in U.S. custody as part of the deal. Czech's interior minister says a person who shot and killed several people in downtown Prague is dead. According to state news, 11 have died. Police say it happened at a university. Former President Trump is asking the Supreme Court not to intervene just yet on a challenge to his immunity claims to dozens of criminal counts. Bloomberg government's Jack Fitzpatrick has more from Washington.
When it comes to the criminal cases against Donald Trump, he has pushed to slow walk them. He's even argued that it shouldn't happen before the 2024 general election. Jack Smith, the special counsel, sent in a request to the Supreme Court for faster consideration of Trump's claim of immunity on one of these criminal charges. He wants to make sure that the trial can start on March 4th.
Bloomberg government's Jack Fitzpatrick in the nation's capital. Heavy rain continues to pummel California, bringing flood threats across the state over the coming days. 6 inches have fallen in Northern California in the past 2 days. In Southern California, there are significant flood threats as well. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Paul, Emily.
All right, Michael Barr, thank you so much. All right, Emily, here's something I don't think I've seen in my career here. Barclays delays a bonus pool decision for last-minute mandates. Top bankers want pool to reflect mandates won recently. The firm had to contend with an exodus of bankers this year. So investment bankers argue capital markets activity has been picking up, and that bonus pool should reflect or should take that into account. That's according to people familiar with the matter. The decision has now been delayed to early next year after the business leaders had asked that remuneration committees for extra time. So it's interesting. I've never heard that before. But they're saying, hey, we had a good end to the year here. Any decisions on bonuses that might have been made in like November, we got to rethink those because business has picked up here.
I didn't realize that the management at these banks actually had a say in a decision like this, that they could say, wait a second, let's delay the bonus pool.
Well, the way it works is business leaders, like, it kind of trees up, but basically the head of investment banking says, hey, I've talked to all my managers in investment banking. This is what they say they deserve, and they take that to the compensation committee, the senior executives. And the same thing happens off each trading desk and so on and so forth. So all these business leaders that have revenue attached to their names, they come up with their requests to the senior management committee, and then the management committee figures out, okay, here is our pie based upon our earnings and everything like that, and we're going to dole out that pie, and to each thing. So everybody, all the business managers come with their ask. And it starts with, the senior banker going to his manager and saying, I want this for me, I want this for my team. And you do that thousands and thousands and thousands of times across the firm and across the globe. And it comes up to one big number. And then it just kind of gets allocated. But now they're just saying, hey, business has gotten better. We got more money to play with. In theory, the pool should reflect that. So we'll see if that works. It's kind of novel, but we'll see how it works for our good friends at Barclays. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to talk about Apple. Company stopping sales of certain Apple Watch models on its website. Mark Gurman, he is our absolute expert on all things Apple. He's the chief correspondent for tech out on the West Coast, and he'll join us to get the latest there. David Kudla, founder, CEO, and chief investment strategist at Mainstay Capital, is going to check in with us via Zoom and give us his market call. And then it is Thursday. That means we talk to 1B Ritholtz, Barry Ritholtz, founder of Ritholtz Wealth Management and host of Masters in Business. Emily, I have no idea what we're going to talk to Barry about, and we'll just kind of wing it, but he always has good stuff to talk about. All right, let's check in. We'll start this off with Amy Marson of Bloomberg Business Flash.
All right, thank you, Paul. And speaking of Apple, Apple added nearly $1 trillion in market value this year. Some say those gains will be harder to come by next year. Dan Ives of Wedbush Security projects the stock will be worth $4 trillion in market value by the end of next year.
Look, I think it's the strong getting stronger. Because Apple's not just going to be the only $4 trillion. I think we look out 18 months, that company in Redmond, Nadella, and Microsoft, they're going to join them in the $4 trillion club. Because what's happening with tech, AI is the biggest tech transformation since 1995 started the internet. And Apple's valuation hasn't even included that yet.
But Apple still faces uncertainty in China. Shares of Apple now down 0.2%. We check markets for you all day long here on Bloomberg Radio. S&P up 0.7% or 31 points. NASDAQ up 0.7% or 110 points. And Dow Jones up 0.6% or 215 points. The 10-year Treasury yield at 3.87%. The 2-year yield at 4.34%. NYMEX crude oil trading at $73.68 a barrel. That's down 54 cents or 0.7%. And COMEX gold at $2,053.60 an ounce. That is a gain of $5.80. Also, CarMax topping expectations. CarMax is now up 7.5%. I'm Amy Morris. That's your Bloomberg Business Flash. Now more Bloomberg Markets with Paul Sweeney and Emily Graffeo.
All right, Amy Marsh, thank you so much. We appreciate that. Emily Graffeo, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so check that out, YouTube. Go search Bloomberg News, Bloomberg Radio, and that's where you will find us. As Amy was just reporting, another strong day in the market. We are to the upside here with the S&P up 0.7%. Let's see where the action is under the hood today with Nora Melinda. She covers all the markets for Bloomberg News and a fellow to Emily Graffeo, UVA grad. So I'm surrounded by UVA Wahooas.
We finally outnumbered.
Yes,
exactly.
wahoo to start the show. But the rally is back on today, as you mentioned. I've got all gainers for you here this morning. CarMax, that's ticker KMX. It's up more than 7.5% right now, as much as 13%, surging for its biggest gain since April 2020. That's because the auto dealer reported third quarter earnings that beat expectations. It's got its peers Sonic, AutoNation, Carvana, and Asbury rising in sympathy. And while CarMax's sales seem to remain under pressure, Truist does say that the company's better than expected earnings per share has overshadowed those concerns this morning.
I mean, we're hearing they're selling fewer units, but they're making more profit per unit.
Right. I mean, these things are expensive. Of course, everyone knows that these cars right now are pretty expensive to buy, and they are benefiting from it. Of course, we've got all of its peers rising as well. The company also did post peer-beating margins as elevated car costs have propelled the sector higher as a whole.
All right, good stuff. What else we got?
Micron, it is up as much as 9.3% this morning, its biggest gain since December of 2021. That's actually our third biggest gainer by percentage in the S&P 500. As we know, demand for data centers and semiconductors has been booming, and Micron is a beneficiary. It forecasts adjusted revenue for the second quarter that topped average analyst expectations. And a Jefferies analyst said that while a full-scale recovery will take more time, the company has noted that its medium-term growth stage is just beginning. Its outlook did signal that the company is maybe through the worst of the industry-wide slump and moving back toward profitability.
Stock is at a 52-week high, close to an all-time high, but man, there's volatility in the stock. I'm looking at it. It goes going back to the 80s. It's been out there, but again, approaching an all-time high and at a 52-week high. So that's a nice move there.
67% gain year to date.
Yes.
It's incredible.
I mean, the CEO said that the company has actually sold out of all of its high bandwidth memory that it can make in 2024. So it sounds like they're getting some good sales there.
All right, very good. How about the cruise industry? One of my faves.
I was going to say, are you guys fans of cruises? Do you travel?
I am not a cruiser, but I could be. I could go on a cruise. I've never done it though.
I've done one.
Okay.
It was really fun. I went with my extended family. It was actually a really good trip for a number of people. We had 20 people, and everyone was on the
20
cruise.
20 Gafreos running around there?
Yes, yes. So it was good to keep us all contained in one spot.
Well, Carnival is reaching an intraday high that was last seen in July. It's the fourth biggest gainer in the S&P 500, up as much as 6.8%. It reported a narrower than expected adjusted loss per share, and its peers Norwegian and Royal Caribbean. I'm not sure which cruise line you all took, but those are up as well. Carnival provided a profit guidance for the first quarter of next year that Wall Street is deeming conservative, but Wells Fargo is noting that it's not too much to worry about because management is often known for giving conservative guidance.
I mean, I'm looking at the year-to-date performance. Carnival up 140%. Royal Caribbean up 153%, and Norwegian up 70%, just ripping these stocks. And what I know about the cruise business is from covering the Walt Disney Company, and they got into this business, I don't know, 15, 20 years ago with their Disney cruises, their Disney-themed cruises, and we went out on a couple of overnight trips as they showed off some of their new boats. But it's a fascinating business because the people that are cruisers, like Charlie Pellet, they are diehard loyal cruisers.
They are,
and I think you're either a cruiser or you're not. And if you are, you're like diehard cruiser.
Right.
And they couldn't wait to go back post-pandemic.
Year round. I mean, you see longer and longer cruise line durations. I saw one that was for an entire year.
Oh.
Yeah. I don't know. I also might want to think one of those river cruises through Europe. That might be cool. Go up and down the Danube or something like that, or the Nile. Yeah. I could see that.
But
again,
relaxing vacation. A Carnival, Royal Caribbean, more of like a party, a week-long party kind of cruise.
I mean,
it
seems like it. I mean, what's the family one? Would that be Carnival?
I don't know. See, my problem is
Where do you take your family?
I don't like people. So to be stuffed on a boat with a bunch of people in close proximity, I'm not sure how that would work.
Not
but
the place to be.
They say it's like being in a hotel. If you want to be with people, you can be with people in common spaces. If you don't, you just go back to your cabin and blah, blah.
The Royal Caribbean ships are huge. It doesn't even feel like you're on a ship. That was my takeaway from that one cruise that I took over 10 years ago.
All right, very good. All I remember, like the first 2 or 3 days of the pandemic, these cruise lines rushed into the debt markets, raising money because they knew they were going to be shut down. They didn't know it was going to be for 18 months or 2 years, but they knew they were going to be shut down, and they raised the capital. Boy, were they smart, because it turns out they really did need the cash to weather the shutdown in that industry. Nora, thanks so much for that update there. Nora Melinda, she is a Bloomberg Equities reporter. Let's talk Apple here. I mean, here we are, the holiday selling season. It's kind of important for people that sell stuff, and Apple's certainly a company that sells stuff. One of the things they sell are those watches. I'm not an Apple Watch wearer. Are either of you an Apple Watch wearer?
Nope.
Right now.
Nora's got it. Okay, great. No, I like a watch that tells time. So, but apparently they're having a little bit of an issue here. Mark Gurman joins us here, Chief Technology Correspondent for Bloomberg News. Mark, put it into context. A, tell us what's happening with Apple, and B, kind of put it into context. Like, does it matter?
Well, yes, it certainly matters. And to tell you what's happening here, it's an unprecedented situation. This is the first time in the modern era, or probably in the entirety of Apple's 40-plus year history, where the company is being forced to stop sales of one of its core products in the United States. That core product being the Apple Watch Series 9 and the Apple Watch Ultra 2. Those make up probably 80+% of all Apple Watch sales. The two newest models, they only sell 3 models, so 2 of the 3 models are impacted here. It was a patent dispute with the company in Southern California called Massimo, and the International Trade Commission of the US ruled that Apple is violating 2 of Massimo's patents related to blood oxygen saturation, right? That's the app on the Apple Watch. You click it, it'll tell you your blood oxygen. Most people are looking for a percentage between 95% and 100%. That's in violation. 2 things happening: a cease and desist on Apple being able to sell the watch in the US, as well as an import ban, an injunction, so they can no longer import Apple Watches manufactured outside of the US. All Apple Watches are built outside of the US for those watching at home. So that's the fundamental issue there, right? So starting on Christmas Day, the end of the day, December 25th, the Apple Watch sales in the US are no more when it comes to the Ultra 2 and the Series 9. Now, given that we're talking now and it's Thursday morning, starting at 3 p.m. Eastern time, the Apple Watch will no longer be sold on Apple's online store. Apple retail stores in the US, they have about 270 of them. They're closed Christmas Day. So December 24th, Christmas Eve, is going to be the last day of in-store retail sales. Now, for those who still want to buy an Apple Watch before the end of the year, maybe for themselves or a gift or what have you, Apple is not allowed to tell you this for legal reasons, but I can tell you, you can still get one at Best Buy, Target, wherever they're sold other than Apple retail stores.
What's the history between Apple and Massimo? I'm so curious how Apple got involved in a patent dispute. I mean, you think of Apple, one of the largest, most important companies. How could something like this happen to Apple?
Yeah, so Massimo actually sued Apple in 2020, in January 2020, related to 10 patents on health sensing technology, right? Then in September 2020, Apple introduced the Apple Watch Series 6. That was the first Apple Watch that includes the blood oxygen feature. Now, Massimo, they're known for their contributions and patents related to blood oxygen. So they preemptively sued Apple in anticipation of this watch coming out. Then once the watch came out, they filed an injunction claim with the International Trade Commission of the US, asking for the watch sales to be banned. Now that was filed in 2021. That is not actually going into effect until, like I said, the end of the day, Christmas Day. So it took 2 years and change for it actually to go into effect. Massimo says they met with Apple 10 years ago, back in 2013, before the first Apple Watch was introduced. Apple promised them some sort of partnership or discussed hiring them or licensing from them. In the end, what Apple did is they ended up hiring about 20 to 25 of their individual engineers and executives, hired them to come work at Apple, offered them more significant salaries, and they worked on the Apple Watch without Apple needing to partner with Massimo. So Massimo considered this a trade secret violation, so they sued Apple over that. In addition to these hiring concerns, plus the patent concerns that have been ongoing now, the first lawsuit, like I said, in the beginning of 2020. And now this is the ultimate pushback against Apple, this injunction and cease and desist. Now, what I will tell you is the lawsuit related to the trade secret situation, that actually ended a few months ago. It ended in a hung jury. So these two things, while related, the same companies, this ITC ruling was able to happen exclusive away from the lawsuit.
Mark, what is Apple saying in response here?
Yeah, Apple is saying that they're going to take every legal method possible to get the Apple Watch back on sale. They're complying with the order. They believe it wouldn't be so hot if they didn't comply. What I'm hearing is that Apple is trying to fix this via a software update. So that software update has been in development now for several weeks. What needs to be done is they need to test it. They need to get some sort of testing done related to regulatory, given that the Apple Watch is in some cases used for health purposes, right? So there's an extra layer of testing that needs to be done internally. The blood oxygen feature is not regulated, so they don't have to deal with the healthcare regulators or the FDA. But what they need to do is get approval from the U.S. Customs Agency. They need to submit that software update to the agency. The agency has to review it, and then they make the final determination of if the cease and desist and the import ban should be lifted or not.
When do you expect to see this actually hit Apple's earnings, Apple's stock price? I mean, I'm looking at the HCP function on the Bloomberg terminal right now. I see that this week is looking to be its first down week in over 7 weeks, a 7-week win streak. This will be the first down week, down about 1.5% right now. But when do we actually see this come up in the price action?
Yeah, so the sales and the revenue for the first quarter, right, that runs through the end of December, so December 30th or 31st. So I don't anticipate an impact on Apple's revenue that they're going to announce for Q1. They'll announce those numbers at the tail end of January or at the beginning of February. But what I could tell you is that they're going to probably get impacted on their Q2 or Q3, depending on how long this rolls for. I would anticipate a several $100 million headwind here, which is not extraordinarily material to Apple, but certainly is worth discussing. And it is the difference between a growth quarter and a non-growth quarter, right? All you have to do to grow is generate $1 more than you did in the quarter of the year prior, right? So if you're down several $100 million or a couple billion, you're not going to get that flexibility, and you might have a down quarter when you otherwise would have had an up quarter. But the big question is how long this is going to take. My guess is probably around 3 months, unless we have some surprising stay order from the federal government or some sort of last-minute veto. But I don't really expect either of those.
Mark, what's the what are you looking for out of Apple in 2024? Are there any products that we need to be on the lookout for? Any new services that you think they might try to pursue? Anything else that's on your horizon?
Well, the Vision Pro, right? That's all anyone in the Apple world is talking about right now. That's their first mixed reality headset. I don't think it's going to be a big revenue driver, but it's certainly going to be awesome. The other big thing is Apple.
When is that? Do we know when that's going to happen?
The Vision Pro, that's going to come out by February. So probably at the tail end of January. Or
now, are you going to be one of those tech geeks that's going to get one of these?
Yes.
Yes.
I will be
Spend the whole paycheck on a Vision Pro.
He's going to expense it. Who's kidding who? All right, so that's coming up in February. That's interesting. Now, how's the company positioning that thing?
Well, they're not. They haven't talked much about it since the introduction in June. It's pretty nascent. Like you said, it's pretty expensive. With tax, it's probably coming up against $4,000 threshold for most people. And so it is pretty pricey. I think the big marketing push is going to start sort of more in the middle of the year. Obviously, when they release cheaper models, that's going to be a significant development. You asked about services. I think you're going to see Apple walk into the generative AI space this year. You'll see introductions in June around Gen AI, integrating large language models into the iPhone. So that's going to be a quite significant initiative for the company too, even though they're going to be about a year and a half behind everyone else.
Mark, I don't know if you know it, but Michigan's playing in the Rose Bowl. You're in Southern California. Are you going to the game?
I will not.
How are you not going? Aren't you a good Michigan man?
I'm a good Michigan man, but I'm pretty focused on the Lakers these days.
I see the jersey Kobe in the background, so good for you. Good stuff. Mark Gurman, thanks so much for joining us. Mark Gurman, he's the chief correspondent covering all the technology for Bloomberg News, and really our go-to voice. He brings so much news on the tape on Apple computers, really just all over that company, and there's so much news coming out of there that he breaks a lot of the news, so we appreciate getting some of his time. Mark Gurman from Bloomberg News. He's based out in L.A., so talking about Apple and the software tweaks may be needed for their watch. S&P 500, kind of holding on to that gains here, up 0.6%. The NASDAQ up 0.7%. And for another day, the Russell up 1.2%. That is the outperformer out there. We've had 7 weeks of gains in the S&P 500. How about that? This is Bloomberg. Let's get some company news right now with Lisa Mateo.
You got a call. China is said to approve the first 787 jet delivery since April 2021. Now, it's expected to fly from Boeing's factory in Seattle to Shanghai as soon as Thursday. Bloomberg's Katie Greifeld says it's an encouraging sign.
The first being that it could be taken as a positive signal that U.S.-China trade tensions are maybe easing just a little bit here. And two, Boeing and Chinese airlines, they've been waiting for Beijing to allow 737 MAX deliveries after 5 years. Remember, that model was grounded globally back in 2019 following 2 fatal crashes.
Boeing right now up about 0.5%. We're learning more about new contract that Southwest Airlines pilots will be voting on next month. Bloomberg's Gina Cervetti has those details.
The 5-year deal would boost pay by 50% overall. That includes a roughly 29% pay increase when it's approved. The union said the contract will cost $12 billion. The vote is scheduled for January 8th through the 22nd. Pilots at Delta, American, and United have all signed their deals.
Southwest up about 2%. And from planes to cars, Toyota recalling 1 million vehicles sold in the U.S. due to an airbag sensor glitch. Now, sensors installed in some 2020 through 2022 Toyota and Lexus sedans and SUVs, they could improperly classify passenger weight, and that could cause the side airbags not to deploy during a crash. And Honda recalling 2.5 million cars and SUVs that are at risk of stalling due to a fuel pump failure. It covers certain 2017 through 2020 vehicles, including the Honda CR-V and Accord, and certain Acura models. Those are the company stories we're following. I'm Lisa Mateo. This is
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. I'm Amy Morris. Shares of Micron gained after giving a strong revenue forecast. Micron shares right now up nearly 6%. And Marathon Digital Holdings has added Anchorage Digital Bank as a Bitcoin custodian. Anchorage Digital Bank is the only federally chartered crypto bank. Marathon Digital shares now up more than 6%. Earlier, it was nearly 9% higher. We do check the markets for you all day long here on Bloomberg Radio. The S&P up 0.6% or 32 points. NASDAQ up 0.8% or 116 points. Dow Jones up 0.6% or 213 points. The 10-year Treasury yield at 3.86%. The 2-year yield at 4.34%. NYMEX crude oil down 0.6% or 42 cents, now trading at $73.79 a barrel. COMEX gold at $2,055.50 an ounce. That's a gain of $7.80 or 0.4%. And the euro at 1.0993 against the dollar. The yen at 142.08. That's your Bloomberg Business Flash. Bloomberg Markets continues now with Paul Sweeney and Emily Grafeo.
All right, thank you very much, Amy Morris. It is Emily Grafeo and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Radio. Another really strong day in the marketplace today. The S&P up 0.7%. 7 weeks in a row of a positive performance in the S&P 500. Really putting a capper on the year, which has a lot of folks saying, okay, now what? So let's check in with David Kudla, founder, CEO, and CIO of Mainstay Capital Management. David, I, for one, was taken by surprise by this move we've seen over the last 7 weeks. How about you? What do you make of what's happening out there in the market?
Well, there's a couple things. November and December are historically the strongest period for stocks, going back to 1950, going back, many decades. And we've had the Fed first say that they're holding on rates. We have indications that they were pausing on rates, and then this last Fed meeting a week ago was a little bit confusing, but certainly with the dot plot, we came away with 3 rate cuts for next year. The forecast, we're back in one of these scenarios, where it seems like everybody's one-upping each other on how many rate cuts we could have. I've heard as many as 6 rate cuts next year.
Wow.
So the market discounts the future instead of higher for longer. Now there's more belief of rates coming down. So we've seen stocks and bonds just have a tremendous rally over these past several weeks.
Yeah, I mean, it's been a really big rally, and a lot of the flows and the positioning point to just people really buying in, people buying the S&P 500, buying the NASDAQ. Are you also buying U.S. large cap equity, and why add to that exposure when it's already run up so much this year?
Yeah, so another addition to the amount of buying now, because it's like we're almost in a melt up. You've got professional money managers out there that are lagging their benchmarks. They're playing catch up and trying to take advantage of this rally to do that. Retail money is coming off the sidelines because money market funds were paying such high yields, but now the market is doing so well, so we're seeing that money come into the market. So we've been bullish all this year in that August, September, October timeframe. That's where our alternative investments help us out, and the very short duration, ultra short term bonds and floating rate bonds we have help us out. But we've actually been adding to equity exposure just a small amount. We're above our nominal levels in equities, and that's worked out well because we think that the rally, even though we have, like we've already had a day this week, we may have a week like that. We may have another 3, 4, 5% or more correction coming in the next few months. But we had a 10% correction on the S&P 500 in the third quarter, in that August, September, October, 12% on the NASDAQ. So we're coming off that. Yeah, when we look at technology, there are technology stocks that are trading at high valuations. But some of the Magnificent Seven and some of the more broader areas we're broadening out into, we have some value. And we're also adding to small and mid cap finally. We had a head fake on small cap earlier this year back in June. But, we're really seeing some sustained resurgence in small caps. And if rates are coming down next week, those small companies in the U.S. that depend more on debt, they benefit. And that's just going to help small caps and mid caps doing better in 24.
Hey, David, I'm looking at the fixed income space, the IN Go function on the Bloomberg terminal. I see green across the screen here. So that's the really good news, kind of mid-single digit returns across much of the fixed income space. But boy, the standout is high yielded, over 12% total return this year. I wouldn't have guessed that. I mean, I've heard so much talk about recession in 2023 that I didn't think folks would want to gravitate towards high yield, but that's where the performance has been. How do you look at the high yield space now?
Yeah, so we've seen credit spreads tightening some, and when we look throughout the year, what my expression is. I've said it on the show several times because I've been saying it for a year and a half or more. The recession that's always 6 months away.
Right.
We're certainly not going to get a recession this year because we certainly had very positive GDP growth in the third quarter, even if the fourth quarter would come in negative. But right now, forecasts around 2.5% for GDP in the fourth quarter. So we've played on very short duration. We've been in high yield, and of course now what we've been doing over the past couple of months is finally starting to extend our duration. There were people extending duration earlier in the year and got crushed in that trade. We stayed with ultra short term and floating rate. That's where our income port has been, but we are now and have been increasing duration because of this decline in rates. But we're not looking for, we talk about a recession with unemployment. We got up to 3.9%, came back down to 3.7%. GDP has stayed robust, maybe lower than certainly what we saw in the third quarter or in the second quarter, but we're in the third quarter, but we're seeing a robust economy, a still good labor market, and we just don't think we see anything more than it would be a very, very mild recession. If no recession and whatever your definition of a soft landing is next year.
David, what's
So
your
high yield? So
go
direct to the question, high yield is, that's when does high yield, when we think the economy is going to contract or go into recession, high yield suffers. If those beliefs start to change, high yield does well, especially when we're coming out of a recession. That's not the case here, but the fears of recession have waned so much in the past months.
What about your inflation outlook? I haven't really heard anyone say the word inflation, to be honest, in the last few weeks. Have we moved on as seeing inflation as a material risk to portfolios next year?
I think we can be moving on. I think it's what many investors are doing. We're down. Certainly, goods inflation is very low. Services inflation is still, just begrudgingly a little bit higher, and needs to come down more. But if you look at where we were, up at 9.1% on CPI. And now we're all the way down around 3% or 3% and change. And, we're in an area where, yes, there's more room to go, or there's more downward movement in CPI they want to see, or PCE, their preferred inflation measure to get to target. But, we look at what happened to M2. M2 money supply has just crashed. That's one indicator for us on inflation. And that we see some of those disinflationary trends that was the secular trend over decades, with the innovation, technology, now AI. So I think everyone expects that basically the Fed has killed inflation, and a little bit further to go. But unless we have some resurgence, a much stronger than expected economy, or the Fed has to come back in and deal with it and raise rates, that's an issue where we would have higher inflation. But we just don't expect it. We've expected inflation to continue to come down. That last stretch to the 2% target might be difficult, but when we're down around 3% and going under, which we expect, that's nothing to really worry about on inflation front. Now we're back to fundamentals of the economy, of the markets, like earnings and other factors that are becoming more important as inflation has become more and more tame.
All right, David, thank you so much for joining us. Always appreciate getting your market thoughts there. David Kudla, he's the founder, he's the CEO and the CIO. Pretty much does everything over there, Mainstay Capital Management there. And he's also the founder and sponsor of Engage, which is the world's largest student stock pitch competition and conference hosted at the University of Michigan. So that's a good thing, too, for the young investors out there. Bring some more folks into the business. Looking at the markets here, Emily, another green day here. It's going to be, looks like another good week in these markets. The S&P's up 0.75 of 1%. NASDAQ up about 0.9%. And again, the Russell 2000 up about 1.2%. So for those investors that were looking for a broadening of participation in the market, they've certainly seen that over the last 5, 6, 7 weeks. And that's a good thing for the overall health of the market. I learned that in business school. WTI crude oil is off 0.75%, $79 for Brent, $79, and for WTI, the stuff coming out of Texas and shale and all that kind of good stuff, that's at $73.62. We're going to have more coming up. But right now, with our news in New York City, here's Michael Barr.
Paul, Emily, the Biden administration has secured the release of 10 Americans who had been held in Venezuela with some strings attached for the country's president, Nicolas Maduro. Bloomberg government Jack Fitzpatrick has more from Washington.
Venezuelan leader Nicolas Maduro agreed to a series of promises regarding free elections. Obviously, there have been a lot of problems in the past with Maduro deciding when to hold elections, deciding who's allowed to run against him.
Bloomberg government's Jack Fitzpatrick in the nation's capital. Visitors to the Lincoln Memorial in Washington aren't able to access a portion of the monument as workers clean up graffiti left by pro-Palestinian demonstrators. The National Park Service says it could take several days to remove the red paint that now stains the steps leading to the reflecting pool adjacent to the memorial. Czech State TV says a shooting in downtown Prague has left 11 people dead and dozens of others wounded. Czech's interior minister says the person who opened fire at the university was dead. Family members of the 9-year-old girl abducted while camping in upstate New York back in September are speaking out as they prepare to face the suspect charged with her kidnapping in court. Jana Sena told ABC's Good Morning America about the horrifying 2 days the family and police searched for her missing niece before she was found alive.
Pure torture. Pure torture, really. You're thinking, like, what if this doesn't end soon? What if we can't find her? What if, like, all of the what ifs?
The suspect, 46-year-old Craig Ross Jr., is expected in court today. Honda is recalling 2.5 million vehicles due to a fuel pump problem. Meanwhile, Toyota says it's recalling about 1 million vehicles over airbag concerns. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. Bonds slid with third quarter GDP revised lower to 4.9%. Moves to higher yields this morning are likely dip buying opportunities. The S&P 500 is rising again, but yesterday's sell-off is a reminder that the record high may still be tough to achieve. Boeing shares are higher after China resumes deliveries of the Boeing 787. It's an indication that strained U.S.-China trade relations could be easing. Bloomberg's Katie Greifeld.
It could be taken as a positive signal that U.S.-China trade tensions are maybe easing just a little bit here. And two, Boeing and Chinese airlines, they've been waiting for Beijing to allow 737 MAX deliveries after 5 years.
Bloomberg's Katie Greifeld explaining that the deliveries will resume of the 787s, but that provides an opening for the resumption of the 737s. Boeing shares are now about 0.7% higher. We do check the markets for you all day long here on Bloomberg Radio. S&P 500 up 0.7% or 33 points. Now at 47.31. NASDAQ up 0.9% or 131 points at 14,908. And the Dow at 0.5% higher, let's say, a gain of 210 points, now at 37,292. The 10-year Treasury at 3.86 and 2-year yield at 4.34%. NYMEX crude oil is down 1.1%. That's a drop of 79 cents. And they're trading now at $73.45 a barrel. COMEX gold at $2,054 per ounce. That's a gain of $6.40. That's your Bloomberg Business Flash. Now more Bloomberg Markets with Paul Sweeney and Emily Grafeo.
All right, Amy Marsh, thank you so much. We appreciate that. Emily Grafeo and Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio. We're streaming live. We're doing that internet thing that the kids are doing, so head over to youtube.com and search Bloomberg Radio. It is shopping season, high gear, everybody out and about, going to the stores trying to find that perfect gift. And that brings me to a theme in retail, which was, I don't know if it was the last couple of quarters, they've been talking, a lot of retailers have been talking about shrink. People stealing stuff, you know, and maybe organized theft and all that kind of stuff. Our next guest has got, I think, some opinions on that. One, B. Ritholtz, he's the host of Masters in Business for Bloomberg Radio, and Barry is also the chairman and chief investment officer of Ritholtz Wealth Management. So, Barry, that was certainly a narrative, this shrink and organized theft of retailers over the last several quarters. What's the data actually show?
Yeah, roving organized crime gangs.
Yes.
Stealing shaving cream is a big thing. So look, I have no personal expertise as either a retail analyst or a criminologist. However, I've been tracking the National Retail Federation for literally decades, because every year they demonstrate their innumeracy by making their holiday shopping forecast. And they survey a bunch of people who have no idea what they're going to spend each year. They don't remember what they spent last year. And they say, you know, what's your spending look like? And the difference between those two made up numbers are forecasts. So when the National Retail Federation put out a report earlier this year, I was very skeptical and I kept an eye on it for a while. And then a few weeks ago, we discovered two things. First, we discovered that most of the numbers in it were made up. They were just completely pulled from all sorts of different research with different methodologies, all apples and oranges. And second, the concept of organized retail theft was overstated by about 10x. They said it was about half of the $95 billion, $94.5 billion in retail inventory losses in the prior year. I think they were referring to 21, turned out to be 5%. There aren't roving organized gangs of shoplifters. There are a handful of very dramatic smash and grab videos that become memes that go viral, but that's not where most of the losses happen. In fact, the vast majority of losses is employee theft or discounts given by people who work in the companies. And there's lots and lots of other sources of fraud, but it's clearly not as advertised.
Employee theft, that's very surprising.
I mean, here's the chart. Here's the data, Barry, you have in one of your notes, and just in terms of sources.
Well, that's an old chart, but that's from 2015.
Okay.
But it's been, it's fairly consistent year over year. It's pretty consistent. They put employee theft and internal theft about 35%, and then shoplifting at 38%. But there have been some research and some studies that say a surprising amount of that external shoplifting is wink, wink, nudge, nudge, someone in the company looking the other way as either things fall off a truck or go out the front door.
That's kind of how it happens in New Jersey, falling off the truck.
That's right. So by the way, there are lots and lots of different ways that there are lots of headaches that retailers have to deal with. There's return fraud and credit card fraud and vendor fraud, people sending light shipments and, picture a Walmart or a Target. That's a near impossible task to track every last item that shows up. So 1 or 2% of things disappearing, not unexpected, but to, terrify the whole country that roving gangs of thieves are responsible for half of the losses. By the way, very consistent with the National Retail Federation. They are a lobbyist, and we as a media organization do not do a service to our readers and listeners when we just cut and paste what lobbyist organizations say and do. They have an agenda, and the truth isn't part of their agenda. They're representing, it's the same thing with the National Association of Realtors, another dubious organization that puts out a lot of nonsense. The National Truckers Association, who, by the way, their data has been pretty reliable. Of all the various groups I track, the truckers, the international shippers tend to be a little less, hand-waving and cheerleading, and a little more circumspect, because their members really rely on the data, as opposed to the National Association of Realtors. It's always a great time to buy or sell a house, asterisk, that generates a commission.
Hey, Barry, let's get to the markets just real quickly, because these last 7 weeks have been extraordinary for a lot of people, both in the equity markets and fixed income markets here. What's your take?
I think this is pretty obvious what's been going on. If you looked in the right place at inflation last year, it was pretty clear that by June of 2022, inflation had peaked. The question was, when was it going to be apparent to the Federal Reserve that inflation, the worst of inflation, was behind us? And not only could they stop raising rates and pause, but they can begin contemplating cutting, bringing us somewhere off of these levels where, historically we're about average, maybe slightly elevated for the modern era. Somewhere in the 4s, it makes more sense than 5.5 for Fed funds rate. So it took a while before Jerome Powell said, okay, the worst of this is behind us. If you understand how the real estate portion of CPI is put together, it's pretty obvious that in real terms, in actual real live terms, that number has been falling. The model the BLS uses and the Fed uses operates with a tremendous lag. And secondly, a big source of the real estate inflation we've seen is coming from the Fed, who took rates up so high that mortgage rates had no choice but to go in the 6s and 7s. Now we're back in the 6s. As soon as we get back into the certainly high 4s, maybe mid 5s, all these people who have really cheap mortgages, their houses will shake loose, they'll come up for sale, and some of the elevated asking prices will normalize.
Right.
But it's pretty obvious it was the pandemic, stupid. This was an exogenous shock. Amazing how many people, from Larry Summers to Jerome Powell to lots of old school economists, their models just couldn't deal with a meteorite coming from outer space.
All right, Barry, great talking to you as always. Barry Ritholtz, he is the host of Masters in Business on Bloomberg Radio. He's also the chairman and chief investment officer at Ritholtz Wealth Management. S&P up 0.7%. We'll have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Micron delivered a strong forecast thanks to data center demand from the AI boom. Bloomberg's Ed Ludlow points to the outlook for the fiscal second quarter.
$5.1 to $5.5 billion above street estimates, beating on that forecast. On the bottom line as well, expecting a loss of 21 to 35 cents per share. The street was seeing a loss in the fiscal second of 62 cents per share.
Micron is up about 7%. It would be a merger of Hollywood proportions if a deal is reached. Bloomberg's Joan Doniger has that story.
Warner Brothers Discovery has held talks on a deal to merge with Paramount Global that would combine two of the biggest media companies in the world. Sources tell Bloomberg Warner Brothers Discovery CEO met with his counterpart at Paramount about it and has spoken with Paramount chair Sherry Redstone, whose family company owns a controlling stake in Paramount. A merger would put both the movie and TV studios of each company, as well as HBO and CBS, under the same roof and would likely face at least pushback from federal regulators.
All right, let's check in with those shares now. Paramount is down about 1.5%. We've got Warner Brothers Discovery down more than 2.5%. And Comcast Universal Studios is hoping to build a new European theme park about 60 miles outside of London. The group bought a 481-acre plot in Bedford back in August for $271 million. And a spokesperson says it's looking into whether it can construct a park and a resort there. Now, Universal Studios Great Britain, it would be the company's first European destination since it sold its Spanish property in 2005. Comcast is down about 1%. Those are the company stories we're following. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, a solid day in these markets. The S&P 500 is up 0.6%, NASDAQ up 0.8%, and the small cap Russell 2000 up 1.1%. Yields slightly higher. 10-year Treasury about 3.87%. WTI crude oil off 1.2% here. It's had a couple-day rally on some of those concerns in the Middle East. It's off 1% today, $73.30. So we'll keep an eye on that. With our news in New York City, here's Michael Barr.
Paul, Emily, the U.S. has freed a close ally of Venezuelan President Nicolas Maduro in exchange for the release of 10 Americans imprisoned in the South American country and the return of a fugitive defense contractor known as Fat Leonard. The American detainees were back on U.S. soil late last night. Presidential envoy Ambassador Roger Carstens flew with 6 of the 10 Americans from Venezuela to Texas.
The Secretary of State and the President say that the most important thing we do in the United States government is protect the safety and security of our citizens, especially when they're overseas and especially when they're taken either hostage or they're wrongfully detained by another country.
The swap comes weeks after the Biden administration agreed to suspend some sanctions. Czech police say a shooting in downtown Prague has killed 10 victims and wounded dozens of others. Police say officers were deployed due to a shooting at a school. The Interior Minister says that the person who opened fire was dead. Texas Governor Greg Abbott chartered a flight of over 100 migrants to Chicago. Abbott says the sanctuary city started obstructing and targeting our busing mission. Chicago's 10th Ward Alderman Andre Vasquez says he is furious that Abbott could knowingly send vulnerable migrants to an unknown city, leaving them deserted.
It is despicable. It is inhumane. It's un-American to see that coming from another state.
Meanwhile, Abbott says Texas will include more flights to Chicago. There is an FBI warning about gift card scams. Suzanne Godovic fell victim when she gave a $200 Target gift card as a baby gift. She says when the new mom went to spend the money, it wasn't there.
She was scratching out that silver metallic security lining at the store, at the cash register with all of her baby purchases. And it comes up zero balance. And also there was a note that said that this gift card had been assigned to another account.
According to the FTC, gift card fraud cost Americans more than $160 million in the first 9 months of this year. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Emily.
Hi, Michael Barr. Thank you so much. We appreciate it. Here's a story about one of my former employers. Citigroup has decided to exit the distressed debt trading business, the latest retrenchment in Chief Executive Officer Jane Fraser's effort to reshape the firm in pursuit of higher returns. The move, described by people briefed on the matter, will remove one of the key players in distressed debt markets and follows a recent decision by the New York-based bank to get out of municipal bond trading and underwriting. Closing the distressed debt business, run by Pat Criss and Joseph Beggins, will impact roughly 20 positions, one of the people said, asking not to be identified because this information isn't publicly available. A company spokesperson declined to comment. So Jane Fraser, she's serious about retrenching and focusing their efforts and their capital on the businesses where they can generate the highest returns. And, you know, these are two pretty big areas that they're pulling back from, municipal bond and distressed debt.
Yeah, and distressed trading can be volatile. The business at Citigroup outperformed in 2021, but it slowed significantly in the 2 years after that, according to the people who asked to not be named in this story. But it'll be interesting to see how she continues to kind of streamline. She's been laying off a number of upper management as well, like a lot of the other banks.
Yeah, it's interesting. It's a tough road. I mean, I worked there, and when I was there, you had to feel that there was not any piece of business anywhere in the world that you could not get. That's how sprawling Citi was. And I think what they're finding here, or they're concluding years later, is okay, that's fine, but that structure doesn't necessarily generate the highest returns for shareholders. And so, looking at the stock, it's up 0.4% today, up about 11% year to date, but it is really underperformed its peers. And so, there's a lot of work to be done to generate higher returns at Citi. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to get the latest on market movements here with Bloomberg's macro strategist, Vince Signorella. And then Seema Shah, senior global investment strategist at Principal Global Investments, will join us to give her thoughts on this 24 outlook. Phil Orlando, chief equity strategist with Federated Hermes, he's going to join us to talk about these markets as well. So again, another strong day in the market, finishing up another solid week here, making it perhaps 8 weeks in a row of gains. So we'll have to see how this plays out. Right now, let's go to Charlie Pellet for Bloomberg Business Flash.
Hi, thank you very much, Paul Sweeney. Certainly an A-plus guest list coming up right here on Bloomberg Markets. We got the Dow, the S&P, NASDAQ, all advancing. 0.5% gain right now in the S&P 500 index. Stocks are bouncing hard. Do want to begin, though, with a company called Cytokinetics. The stock is jumping the most in more than 2 years after a report that two large drug makers are considering buying the biotech firm. The company is said to be seeing takeover interest from Novartis and AstraZeneca. This, according to Deal Reporter. Right now, we've got shares of Cytokinetics surging by 18%. This on a day when the S&P is bouncing back by 24 points, up by about 0.5%. The Dow up 138 right now, up by about 0.4%. NASDAQ, the composite index, up 106, up by 0.7%, while the NASDAQ 100 index also higher now by 0.7%. 10-year yield 3.87%. The 2-year 4.34%. Spot gold up $11 the ounce, up 0.5%. And West Texas Intermediate crude lower now by 1.2%, 73.30 for a barrel of WTI. Days to go before we wrap up the 2023 trading year, and it's on to 2024. Ann Maletti is head of active equity at Allspring Global Investments, and this morning here on Bloomberg Markets, she summed up 2023 like this.
Look, it's been a really wild ride, and we are getting that Santa Claus rally, certainly a little bit even early, but there's a lot now with the rally that we have that maybe took a little bit away from what we thought might happen in 2024. So I think now's the time to be a little bit more disciplined about the way we enter the year.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. CarMax's third quarter results exceeded Wall Street expectations. CarMax shares driving higher now by 5.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Emily Grafeo is here. Paul Sweeney, we're here. Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to youtube.com and search Bloomberg Radio, and that's where you will find us. I want to bring in Vince Signorella. He is the macro strategist for Bloomberg News. Joins us here in studio. Yes, I said in studio. Just going to highlight that. All right, Vince. What are you hearing from your trading sources about what's transpired in these markets over the last 6, 7, 8 weeks? I mean, hopefully they're all making money here as we plow into an end of the year. But what do you make of it?
Yeah, it's the tide has turned with the central banks leaning from the hawkish tilt to the dovish tilt. It was primarily from the last FOMC meeting where Powell basically shifted, at least in terms of the way the markets look at it. A lot of Fed participants are pushing back on that, saying the markets are ahead of themselves, looking for too many cuts. But again, stress the point that it's not in the number of cuts that people, I think, are or should be focusing on, is the fact that the Fed has shifted policy and that they see themselves more towards cuts in the near future, and that the rate hike cycle seems to be over.
So you think the buying of equities that we've seen over the last few weeks is really picked up? It's all justified?
Yeah, I mean, there was a lot of cash on the sidelines. I understand there still is to some extent, but a lot of folks were intimidated by the Fed. You don't fight the Fed, and thinking still from the Fed in the meeting prior to the last one was the next the next change in rates is more likely a hike. So people were sitting on the sidelines thinking, let's just wait for this to be over. When the Fed finally turns, we can jump on this bandwagon and get going. And then the Fed moved that forward in the last meeting and basically said at least 50-50, but more so the next move is going to be a cut. And now we're also seeing it because of inflation figures coming out of the UK predominantly just this week. Other central bankers are moving in the same direction. So they seem to be moving in chorus. And who goes first and who goes how long and how many, it's anybody's guess, really. But clearly, the bulk of the G10 group as central bankers are leaning dovish.
Do you think Fed Chairman Jay Powell, maybe regrets a little bit his tone here, that maybe he got a little too dovish in some of his back and forth, that the markets have taken it as too dovish? Do you think he has any regrets here? Because some of his fellow folks on the Fed have seemed to be trying to walk it back.
Yeah. The theory is that if the markets misinterpret what he says, he sends the dogs out in terms of the other FOMC participants and tries to walk it back. I mean, that's a lot of that is obviously speculation. I personally miss the days when it was just Paul Volcker talking and everybody else couldn't talk.
Right.
And you just got one message from the Fed, and then you had to read the tea leaves and figure it out yourself. This constant back and forth of conversation we get from FOMC officials, it's what they do at their meetings. They each have models, they each have forecasts, and they argue with one another, and eventually they come to some consensus, but there's ones who think one way, there's ones who think the other way, and whenever one of them speaks, the market goes batty, and it would be nice if they would all just shut up.
How are you thinking about stock-bond correlation for next year? Do we need rates to materially fall in order to keep stocks rallying, or can they just kind of stay put, stay where they are?
It will come back to earnings. I think we're going to need to see rates fall a little bit. We're going to need to see somewhere along the lines of boosted disposable income. It's not necessarily going to come from wages per se, so we might need to see it come in a drop in inflation where you see lower energy prices, lower shelter prices, things along those lines to give consumers a little bit of breath so they can maintain the pace of spending they're maintaining now. I think the first quarter is going to be a little bit difficult when the holiday bills come due because there's a lot of borrowing to this spending, revolving credits at an all-time high, and delinquencies are starting to pick up. So I think the consumers are a bit more stretched than people think they are. So we're going to need to find some way to fill those coffers again to allow them to keep spending, basically.
Vince Signorello, thank you so much for joining us. Vince Signorello, macro strategist for Bloomberg News. SQUA is the squawk. Get you real-time market commentary from Vince and his team throughout the day. So if on the Bloomberg Terminal, SQUA, go, we'll get you there. A lot of folks, as they think about 2024, as Vince was just mentioning, the sentiment seems to have changed to really leaning towards that soft landing. But there's still some concern out there. Seema Shah joins us. She's a senior global investment strategist at Principal Global Investors, joining us via Zoom. Seema, thanks so much for taking the time here. I know you guys have your 2024 outlook out. I'm just seeing kind of the focus here on pivot. What do you mean by that in 24?
Yeah, it's a play on that Friends line. Well, look, I think, we published that a few weeks before the Fed spoke. I don't think any of us anticipated that the Fed would shift in such a manner and so quickly. But clearly, I think the inflation data is certainly backing up that idea that 2024 is no longer just the year of the pause, but it's actually mainly going to be about the pivot. And for risk assets, whichever way you look at it, there's going to be nuances, but overall, this should be a fairly good year for risk assets, simply because those central banks are going to be pivoting, and importantly, it's not going to be, it's going to be supported by a not too unhealthy backdrop as well.
Seema, you've seen a lot of year-end markets. How crazy has the buying frenzy in equities been for this year-end, just compared to the rest of your career?
It's certainly very aggressive. I think that it's aggressive, but it's also not entirely unexpected, because as we've been going through this year, every time we've been talking to investors, to clients, and this is anywhere around the world, in Asia, Europe, the US, it's pretty much the same thing. The questions that we've been getting are generally along the lines of, when are we going to know what the Fed is doing? When will they peak? They're kind of just waiting to put their money to work. So the uncertainty has been clouding a lot of investors' minds, but they haven't had any concerns that this is going to be a downturn, or there would be a downturn that would be very destructive, that would see any kind of permanent disruption to the underlying economy. And if you don't think there's going to be permanent underlying damage, then essentially what you're doing is you're just trying to time the market. So when things are clearly going to be an upward move. So as soon as we saw any indication actually at the bank at the end of October that Chair Powell was having a slight shift in stance, that was opening the airwaves, opening the doors to a huge flood into that equity space. Now, I do actually think that Q1 is going to be a little bit more volatile, and you're going to have to see investors be strong in the face of that volatility. But overall, as I look out over 2024, I think investors are right to be taking on this slightly more optimistic perspective.
Seema, so the Fed, I guess, was clear, maybe clearer than they wanted to be about their, being open to being a little bit more dovish here. How about the Bank of England, the European Central Bank? What are we hearing out of those institutions?
So again, it's a very, very similar sentiment, and again, backed up similar to the US by a clear decline in inflation. Actually, in Europe, in the euro area, it's been extra interesting because the inflation has actually come down faster than it went up, which is unusual. You kind of hear the analogies of inflation takes the escalator up and stairs down. Well, it's the opposite way for Europe. So inevitably, the ECB has had to acknowledge that, and they have also taken on a dovish stance. Same thing with the Bank of England. But I think the key difference that you're seeing is that they are retaining an element of caution. They are still worried that if they were to cut rates too early, you would see that renewed drive up in inflation. So whereas they're acknowledging that there's likely to be a pivot in 2024, they have pushed back a lot harder at the idea that you could see rate cuts as soon as March.
If you were working at the Fed, what would stop you from declaring victory right now? Is it the labor market?
So it's a couple of things. I, like everyone else, has probably pored over Waller's speech, the two different speeches that he gave a couple of weeks apart. And he had said at that point that he needed to see a couple of months of clear inflation evidence, and it was disinflation to that three-month rate was moving down sufficiently. And in the end, he only saw 1 month of that, and he had enough evidence. To me, I would be a little bit more cautious. I'd say, well, look, let's get a series of those numbers to know for sure. Because if you look back to the 70s, 80s period when you did have very high inflation, the Fed made the mistake of cutting rates too early, and then that drove inflation to a new high. So I would certainly be a little bit more concerned, especially knowing that an unemployment rate of 3.7% is extraordinarily low. It's a very, very tight labor market. And so I would need to see some more evidence of a slight economic slowdown. Obviously, you don't need a recession, but certainly more evidence of slowing economic activity and unwinding labor market before I felt sufficiently confident to start cutting interest rates.
So, Seema, where the good folks at Principal Global Investors, where do you guys see the opportunity in 2024? We've had such a move here in this last 6, 7, 8 weeks. I think people are very happy with the performance, but they're saying, oh boy, now what do I do in 2024?
Right, and this is a time where, we have to start thinking about valuations. What are the valuations? What are the signals coming to us? So from the equity space, we know that the Magnificent Seven have driven, most of the gains this year, but their valuations are very, very expensive. And although we are long-term holders of some of those really big tech stocks, there is something to be said for some of that small cap universe. Those valuations are attractive. If you believe that there's going to be a cyclical recovery around the second half of the year, then to me, this is a good time to be ready to ride some of the volatility down in the first quarter or so, but knowing that you will be well positioned for the upside. So I think that valuation set level is important. From a credit perspective, credit spreads are extremely tight, historic tights. Knowing that there's going to be a little bit of a slowdown in around Q2, Q3, I worry a little bit about certainly the lower quality aspects of the credit spectrum, so I'd be entirely focused on that core fixed income space. And the other part of this is as much as we know or feel that there is going to be a central bank pivot, there is still a lingering inflation risk. Economic theory tells you as long as growth is above target, there's always going to be the risk that inflation resurges. And we know that bonds have not done very well in protecting when inflation is moving up. So I still think that means you need to have some kind of exposure to real assets in your portfolio. It doesn't need to be too much, but at least that broad diversification, so you're protected against a couple of scenarios which, to our minds, they're not entirely throwaway. You still have to consider them.
What about outside the U.S.? Is that an area to invest in for 2024?
I think there are certainly opportunities. The main area that we're looking at the moment is it's still in emerging markets, but ex-China. The beauty at the moment is that you can actually think about emerging markets without having to consider some of the downturn that's going on in China. So the areas that we're looking at are Latin America primarily. Again, we're looking at very, very cheap valuations. You've got central banks which are already cutting interest rates. And also you have the ability to ride onto a secular theme of deglobalization, so kind of the regionalization of supply chains, as well as the fact that some of the natural resources that would be coming into play as you think about the energy transition are actually coming from Latin America. So you can have a number of secular plays by positioning in Latin America at a time where valuations are extraordinarily attractive at this point.
So China, it's such a big part of the MSCI, but I guess from your perspective, the risk is not, the reward is not worth that risk?
We do have concerns about China still lingering. You know, we've seen from the recent conference that the policymakers are not planning to move in with big stimulus. They're still thinking about quality growth, which of course from a long-term perspective is positive. But as long as you're not seeing the property market respond in a way that would improve confidence, then the Chinese economy is going to be struggling. And the one thing I come back to is, if you do a quick comparison of the US property market and the Chinese property market, just to give you an idea, in the US, the property market accounts for about 30% of US household wealth. In China, that number is 60%.
Wow.
So as long as the property market is struggling in China, then it's very difficult to see a meaningful economic recovery. And without that recovery, I think investors stay very, very cautious, and you just don't see those flows back into Chinese equities.
It's great analysis, as always. Love that data point. I'm going to use that. I'll credit Seema, but I will definitely use that. Seema Shah, Senior Global Investment Strategist over there at Principal Global Investments in London, 1 Wood Street, great part of town, just outside of the city. Good stuff over there. S&P 500 up about 0.4%. NASDAQ up 0.5%. So giving up a little bit of the gains from earlier, but still positive here. I'm going to call out the VIX for Tom Keene. It's a little bit elevated here, 14.4 on your VIX, still on a relative basis low, but it had been down 12, 13 range. We call that out for Tom. A little bit of movement here again on crude oil prices, off 1.3% for WTI crude oil. That's $73.25 for the crude there. It had been moving up higher the past couple of days on those regional risks over there in the Mideast. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Paul, today's the day Apple plans to pull its Series 9 and Ultra 2 smartwatches from its online store after a patent dispute with Masimo over technology that measures blood oxygen levels. Dan Ives, Senior Equity Research Analyst at Wedbush Securities, says this is just the beginning.
Look, they're going to be facing more and more patent issues in the healthcare front. I think what this is going to ultimately cause are some acquisitions, especially on the healthcare side, because they're doubling down on healthcare, even with Vision Pro and going in the future. I think this is really going to catalyze more M&A. This has been a shot across the bow.
Now, the watches will be pulled from its physical retail locations on Christmas Eve. Now, Dan had mentioned the Vision Pro. Well, it turns out it may not be long before Apple takes the wraps off the mixed reality headset. Bloomberg's Gina Cervetti has that story.
Sources tell Bloomberg News the company is ramping up production of the Vision Pro with an eye toward a February launch. The Vision Pro is Apple's first new product category since 2015, and it's pricey at $3,500 for the headset.
The rollout will be Apple's most complex product launch yet. Apple shares are down about 0.3%. And a handful of billionaires are battling it out to own SpaceX's rival. Sources tell the Wall Street Journal that United Launch Alliance has received buyout bids from Jeff Bezos' Blue Origin and private equity giant Cerebus, and is getting interest from aviation and defense manufacturer Textron. No word yet, though, on a price for those bids. Those are the company stories we're following this hour. Stay tuned. We have much more Bloomberg Markets coming up in just a bit. I'm Lisa Mateo, and this is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. A rebound for the U.S. stock market after yesterday's sell-off. Stocks moving higher after data this morning signaled the economy is heading in the right direction, cementing bets for deeper rate cuts from the Federal Reserve. Here's where we stand. The S&P up 16 now. That is a gain of about 0.4%. We do have the Dow Jones Industrial Average up 89 points, an advance right now of about 0.2%. And we've got NASDAQ up 77, a gain there of 0.5%. Spot gold is advancing by 0.5% at $2,042 the ounce. West Texas Intermediate crude down 1.5%. 73.11 a barrel. Angola announced today it'll be leaving OPEC following 16 years of membership amid a fractious dispute over oil production quotas. Oil stocks trading mixed right now. ExxonMobil down 0.3%. ADRs of BP, they're up 0.7%. Chevron right now lower by 0.6%. 10-year yield 3.87%, with the 2-year now yielding 4.33%. So again, recapping, stocks are higher. S&P now up 16, a gain of 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pello, thank you very much. We appreciate that. Emily Graffeo and Paul Sweeney were live here in this Bloomberg Interactive Broker Studio, streaming live on YouTube. You know, the market's been moving like crazy, ripping since kind of mid-late October. I don't know. I think it's a fair question to ask. Are we over our skis here? Phil Orlando, Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes. He joins us. Phil, I'm going to put that question to you. I mean, I don't know. I mean, are we over our skis here in terms of how quickly the equity markets have moved, the bond market has moved just in the last, 6, 7, 8 weeks?
First of all, thanks again very much for having me on. And the answer to your question is yes. That you go back to the summer months as we were talking about this, we thought we'd see, maybe an 8 to 12% correction over the late summer, early fall. Maybe we bottom out at about 4,200. We ended up bottoming at an oversold 4,100 right at the end of October. The move back up here over the last 2 months has been extraordinary. We're up like 16%, just under the 4,800 level this week. Now, our view at the time was that stocks would enjoy a very powerful year-end rally that would take us up to about the 4,600 level. But when we saw what was going on in the economy, with the significant decline in inflationary pressures, the move down in benchmark 10-year treasuries, right? We went from 5% down to 390. That has a very powerful inverse effect on price-earnings ratios. As interest rates are coming down, Ps are expanding. So that forced us to go back to the drawing board, sharpen our pencil. We took our estimate, our year-end estimate for the S&P up from 4,600 to 4,800 on the basis of the fact that P multiple should end the year at 19 times instead of 18 times. That all occurred in the space of that 2-month period. So the goalposts moved to some extent, but they moved in a much more powerful way. What that did, I think, is borrowed some of the returns that we're expecting from next year. We've got a 5,200 expectation for the S&P 500 next year, but that's literally about 400 points above where we think we're going to end the year here. So this 16% rally we've seen in the last 2 months has been a very, very powerful rally. The market, at least yesterday, seemed to suggest that maybe we got a little ahead of ourselves.
Do you have any sense of where all of that money is coming from? Is it exiting money market funds and going into the stock market, or is it exiting bond funds? You look at ETF flows, and actually this month we saw negative outflows out of bond ETFs, and we saw positive flows into stock ETFs. Where are people getting all this cash to keep buying stocks?
You answered the question correctly, Emily, and it's a two-part answer. The first is that you've got $6 trillion sitting in money market funds, and if your yield is 5% and interest rates are going lower, that you want to take that out and move it into an instrument where you can either get better capital appreciation or better yield. The yield on a lot of domestic value stocks is up in that 4 to 5% neighborhood, yet you've enjoyed some capital appreciation over the last couple of months. Same thing on the bond market. We thought that benchmark 10-year Treasury yields at 5% in the middle of October was significantly oversold. Well, guess what? We've gone from 5% to 3.90 in the space of the last 2 months. Bonds are now overbought. We would expect to see yields back up a little bit here. So you've got investors taking some profits out of the bond market going into stocks, and some investors taking money out of their money market funds and moving into stocks. So you've got plenty of dry powder here that's been driving this rally.
And so, Phil, another question that I'm sure you get a lot is, do I keep chasing these Magnificent Seven, which have been working and are putting up the big numbers, or do I look elsewhere, look for some other names that maybe are better value?
So we're not suggesting that you go zero in growth or technology, but what we have seen over the last couple of months, this 16% rally, is this market rally that was very heavily concentrated in the Mag 7 in the first 7 months of the year is broadening out. Domestic large cap value doing better, small cap stocks doing better, international stocks doing better. That's a trend that we think has legs over the course of next year. So maintaining a neutral or slightly underweight position to the domestic large cap growth technology names makes sense. The overweights, though, should be in these other categories: value stocks, small cap stocks, international stocks. We've got a catch-up trade that started over the last couple of months. We think that's got legs into next year.
What do you think, Phil, about the Fed? I mean, there was a definite pivot in tone, if nothing else, from the Fed Chairman Powell. And now, if you look at the WERP function, there's all kinds of rate cuts pricing in. It changes all the time. How do you think the Fed will proceed from here? I guess it's just a question of when.
So we absolutely believe that the July 26th hike was the last one in the cycle. The Fed is at their terminal rate at 5.5%. They are on pause. We think that pause, though, extends until the second half of next year. We do not see the Fed cutting 6 times next year, with the first cut coming in March. Our best guess is that maybe we've got that first cut in July, just after, second quarter GDP is flashed poorly. Then the Fed typically stays on pause in a presidential election year between Labor Day and the election. We've got an FOMC meeting 2 days later on November 7th. That could be a cut. And then we've got a final meeting of the year, December 18th. That could be a cut. So we think 3 cuts in the back half of next year. We think the Fed is going to remain patient in the first half of the year to make sure that inflation continues to move in the right direction.
I'm curious to hear more about some of the most high conviction sectors that you're looking at for next year.
Well, certainly the easy call in terms of valuation is energy. Energy prices, crude oil is sitting up at $95 a barrel not that long ago, and we're now back around $70 a barrel. Yet you've got all this volatility and instability in the energy market right now. We would expect to see crude prices over the course of the next year move back into that $80 to $90 a barrel neighborhood. You've got very low PEs and very high dividend yields. Small cap stocks, particularly in the biotechnology area, with interest rates coming down, is an area that we think is going to do really well. And then international, you've got Europe, the UK, Japan, the emerging markets. They are probably 6 to 12 months ahead of us in terms of the economic cycle heading down into recession. We expect that they're going to lead us coming out of, sort of this economic malaise. So catching attractive valuations overseas, which right now are twice as cheap as they normally are, with dividend yields twice as high as they normally are. We think international stocks make a lot of sense here as well.
Hey, Phil, how about valuation here just in this market? We've seen that move in the S&P 500 over the last 7 weeks of about 16% here. I don't recall seeing a commensurate increase in earnings estimates out there. Where are we on? Do we have some risk out there in terms of valuation?
Well, you certainly do. And I think you're quite right that we're still looking for $250 in earnings next year, $275 in earnings in calendar 25. We haven't materially changed those numbers. We did add a multiple point to our valuation expectations, simply because benchmark 10s went from 5% to 4%. That requires you to change your valuation assumption. So, this rally probably continues into the month of January. New money tends to flow in, IRAs and 401ks and, that kind of thing, rebalancing, bonus money. But as we get into, February, March, where are those PEs going to be? Is 18 or 19 going to turn into 20 or 21? And at that point, investors say, well, maybe we're again, a little ahead of ourselves here in terms of valuation. Maybe we start to see a pullback. The economy, in our view, is going to start to slow materially in the fourth quarter. One of the things that I thought very interesting this morning was the revision down in third quarter GDP from 5.2 to 4.9, not a big deal. But the big delta was the decline in personal consumption from 3.6 to 3.1. Remember, a month ago, the flash report on personal consumption was up at 4%. So we've gone from 4% to 3% essentially in that third quarter. That trend we think is heading lower.
All right.
Christmas spending not going great. We think that trend continues as well.
Hey, Phil, thanks as always for taking the time to chat with us. We always appreciate it. Phil Orlando, Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes, giving us the breakdown of this market. With our news in Washington, D.C., here's Scott Carr.
Thanks, Paul. Former New York City mayor and attorney and spokesman for former President Donald Trump, Rudy Giuliani, has filed for Chapter 11 bankruptcy in New York. This after a federal jury in Washington last week ordered Giuliani to pay nearly $150 million in damages to two former Georgia election workers he had defamed by falsely accusing them of election fraud in 2020. Prague's police chief says an armed man who killed at least 15 people was a student at a university where the mass shooting happened. Police and the Czech Republic's Interior Ministry have said the suspect is killed. He's not been named. Officers sealed off the Jan Palach Square and evacuated the philosophy department building of Charles University, which is where the shooting took place. They're still searching the area, including the building's balconies, for possible explosives. The U.S. says serious negotiations are underway over the possibility of a new truce in Gaza and the further release of Israeli hostages by Hamas. Reham Shafari is from Action Aid Palestine. She says the international community should be doing more to secure a ceasefire.
People are dying of hunger and starvation. Children are dying of hunger and starvation.
Though it's reported Hamas rejected the offer of a temporary pause in fighting during talks in Cairo yesterday. Jafari says the delay will certainly mean more deaths of women and children.
This shows how the morals of international community fail to address a catastrophe.
Hamas officials have said 20,000 people have been killed in Gaza since the military campaign launched by Israel. And of course, that follows the terrorist attacks by the Hamas militant group on October 7th. Global news 24 hours a day and whenever you want it. You can always find it at Bloomberg News Now. I'm Scott Carr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ, they're all pushing higher, with the S&P bouncing back by 17 points, higher by 0.4%, a rebound from yesterday. We got data this morning signaling that the economy is heading in the right direction, cementing bets for deeper rate cuts from the Federal Reserve. Right now, the Dow is up 109, higher by 0.3%. S&P also up by about 0.4%. NASDAQ up 0.5%. The NASDAQ 100 index up 0.6%. The Russell 2000 keeps on going, outperforming, up now by 0.9%. 10-year yield 3.88%, with a 2-year that's now yielding 4.34%. Spot gold up $10 the ounce to $2,041, a gain there of 0.5%. At a retreat right now for crude oil. West Texas Intermediate crude down 1.4%, 73.23 for a barrel of WTI. Well, days to go until we wrap up the 2023 trading year, so what to expect next year? Right now, we've got the S&P at 4717. Phil Orlando is Chief Equity Market Strategist at Federated Hermes, and he was interviewed moments ago right here on Bloomberg Markets.
We've got a 5,200 expectation for the S&P 500 next year, but that's literally about 400 points above, where we think we're going to end the year here. So this 16% rally we've seen in the last 2 months has been a very, very powerful rally. The market, at least yesterday, seemed to suggest that maybe we got a little ahead of ourselves.
And again, S&P right now 4718. By the way, you can hear more of that conversation on the Tape podcast. Among today's top gainers, Micron Technologies and Cintas after earnings. Both rose after forecasting beating quarterly revenue. Salesforce lifted by Morgan Stanley's prediction that the software firm will soar to a record. Right now, Micron surging by 7%, Cintas up 5.3%, Salesforce based in San Francisco up 2.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Emily Gaffeo, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on that internet thing, youtube.com. Search there, Bloomberg Ready, and that's where you will find us. Emily, are you a gamer?
I'm not a gamer.
You're not, but you're the gaming demo, though. What's wrong with you?
So my sibling, my brother growing up, he was a big gamer. As the little sister, I had to sit on the couch and watch. So I've been around games a lot, but I was never really the player.
Yeah, I missed that, thankfully. My kids are into it, though, and as a matter of fact, I just made a large purchase in support of this gaming thing, which I've been holding out against for a long time. Lucy Hoffman joins us. She's a co-founder and COO of Carry First. She joins us live here in our Bloomberg Interactive Broker Studio, and she gets the medal for coming the farthest distance, South Africa. Lucy, thanks so much for joining us here. Talk to us about Carry First. What are you guys doing over there?
Yeah, so we're a mobile games publisher focused on Africa. So what that means is that we work with big gaming companies around the world, the Activisions, like Call of Duty, and we help them access the customer base that's growing across Africa. And a big part of what we do is we give gamers in our region the ability to pay for content that they love.
So what type of content?
So it's like the things that you probably just paid for, contributing to this big gaming industry, right? Content like Roblox, right? I know this is a big one with kids, and everyone's asking for it for Christmas. In our markets, they still want to play the same games. They still want to buy the battle pass. They want to buy the credits. They want to buy the extra lives. But unlike in the US, where typically we just pay with a credit card, most of our customers don't have that. So we've basically built a platform that allows them to be able to buy content using mobile money, bank transfer, cash to digital schemes, different types of payments that are really accessible and available in our region.
What are some of the challenges that you face, I guess, dealing with emerging markets?
Yeah, so there are many, but that's also where the opportunity lies. I think the biggest one that we sort of honed in on was this payments piece, right? People are getting access to the internet, getting access to smartphones at growing rates, and then it's just a matter of being able to pay for the things that they want. And so that was the first thing that we really sort of focused in on and honed in on. I think the next one is really just figuring out how to market to this new generation of consumers and give them trust that these are like platforms that they should participate in.
So how do the gaming companies view Africa in general? I mean, I would think that is, of emerging markets, boy, that's got to be one of the most emerging, and it's not monolithic.
No.
So how do you try to help the big gaming companies kind of interact with?
Yeah, so it's like, we think about where China was 20 years ago, or maybe where Southeast Asia was 10 years ago. And that's a pretty good analogy for when we talk to publishers that are sitting in Los Angeles or London, right? Is that this is the last frontier. And this is not just gaming, this is across all markets. 1 out of 4 people in the world in the next 10 years is going to be based in Africa, right? So you talk about growth, and all of it's going to be on the continent. So now is really the opportunity and the time to figure out how to get a foothold in the region.
You have a pretty interesting background. You didn't start out in games. Could you maybe walk us through, like, how did you come up with this? And
in South Africa, by the way.
Yeah, in South Africa, and your background.
Yeah, so, I started out in investment banking at Morgan Stanley in New York, just down the street, and 10 years ago decided I wanted to do something entrepreneurial, and I wanted to live abroad, and so I moved to South Africa. No family ties, but just continue to find opportunity there. This is the 3rd startup I've worked with, and really the idea for it was very much inspired by the Asian internet companies, the Tencents of the world, right? That as this generation of people were coming online, that they really understood the consumer, they captured the consumer and built a really meaningful business on the back of it. While I didn't work in the gaming industry, I am a gamer, so I played games. So I understood sort of intuitively the appetite, and I have definitely paid for gaming content myself, so I understood the industry. But more than that, we got a lot of confidence also just in looking at sort of like secular trends. Gaming is massive. It's not like limited to 16-year-old boys in basements. It's a $300 billion industry.
That's crazy.
Bigger than music, movies, streaming combined. And Africa is the biggest market, so take the two of them.
So give us a sense about the gaming market in Africa. I mean, again, it's not a mono. There's South Africa, but then there's everything else, right?
Everything else, yeah. So, the average age in our region's 19, right? So Nigeria, the average age is like 17. So when we think about games that people are playing, one, it's mostly mobile.
I was going to say mobile, right? They're not going down to the GameStop and picking up a box, right?
Exactly. Okay. Yeah. I don't even think that a lot of the big consoles are distributing on the continent, at least not officially. And so it's mostly mobile, and then we're looking at genres that appeal to younger folks, right? So the Call of Duty mobiles, for example, play really well in the region. The Free Fires, the PUBGs, the shooter games. But you still have the love for the Candy Crush titles. It's still the #1 downloaded mobile game worldwide, including in our markets. But when it comes to actually serving the market, we do think about how do you localize? How do you think about speaking to a Nigerian player and how that's different than an Egyptian player? And so there's some nuance around the go-to-market strategies.
You're outnumbered again.
I know.
Paul.
I know.
We had a UVA alum,
right?
And now we have 2 Greenwich High School graduates.
Greenwich High School. You guys were the fighting.
What can I say?
What?
Cardinals.
Cardinals. Okay.
Very
2 success stories coming out. Who would have thought it?
Many.
So, yes, exactly. All right. So, what's the next year or two? What's the milestone for Carry First? What do you guys want to get done?
Yeah. So we want to have basically the biggest gaming platform across Africa, really reaching the largest amount of players across the region. That's in the countries I spoke about, plus many more. Working with the best IP, right? So we're working with Call of Duty, as I mentioned. We're working with Supercell, one of the biggest mobile gaming publishers. So kind of continue to bring on new partners, reach new gamers, and continue to build.
Who do you compete against there?
It's really tough. There's no one who's trying to do exactly what we're doing.
Okay.
Sort of the confluence of gaming and fintech. And so I would say we have no natural competitors that are focused on the region. It exists elsewhere. Sea Limited, massive publicly traded company in Southeast Asia, was our biggest sort of inspiration, but ultimately will become our biggest competition if they decide to expand into our territory as well.
And you guys have that Silicon Valley support backed by Andreessen Horowitz.
Oh.
Yeah, we have a great cap table. We have support from Andreessen Horowitz, Google.
How much capital have you raised?
$56 million.
Good for you. Congratulations.
Yeah, thank you.
Do we have another raise coming up in the near term?
Yeah, hopefully.
Okay, very good. Lucy Hoffman, thank you so much for joining us. Lucy Hoffman, co-founder, COO of Carry First. If you're thinking about gaming on the continent of Asia, you got to talk to Lucy and her company. So it's a good story. We're glad we got to bring it to you. We're going to have more coming up. This is Bloomberg. Let's get some company news right now. Lisa Mateo.
Thanks, Paul. CarMax's third quarter results top profit expectations, strong pricing and cost cuts, along with growth in wholesale vehicle sales. That all helped. Right now, CarMax shares, they are up about 4.5%. And shares of Carnival, they are cruising after the company reported a narrower than expected adjusted loss per share for the fourth quarter. It also provided profit guidance for the first quarter of 2024 that Wall Street called conservative. Carnival shares, they're up about 6%. And Citigroup has decided to exit the distressed debt trading business. It's the latest effort from CEO Jane Fraser to reshape the firm in hopes for higher returns. Bloomberg's Catherine Doherty has more.
Citi, their decision to do this, they're just showing that they're going to put all of their resources elsewhere. So they still have high yield credit trading, and that likely will remain. But distressed debt is a very specialized part of the credit market.
And Citi right now, it is up about 0.5%. Barclays has delayed its bonus pool decision for this year after top investment bankers asked for more time to reflect business they won in recent days or expect to win. Sources tell Bloomberg they argue that capital markets activity has been picking up, and the bonus pool actually should reflect that. Barclays ADRs right now, they're up about 0.9%. And Wells Fargo has become the first major American bank with a unionized branch. Workers at a small branch office in Albuquerque, New Mexico, voted to join the Communication Workers of America's Wells Fargo Workers United. Now, branches in Daytona Beach and also in California have also filed to hold elections. Those are the stories we're following. I'm Lisa Mateo.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, good afternoon. We've got the S&P 500 up 0.3%, NASDAQ up 0.5%, so another positive day here. Again, 7 weeks of positive gains in the S&P 500. How about that? Yields 3.87% on your 10-year there. So a big change from just 6-7 weeks ago. We had that 10-year trading at 5%. Max Abelson joins us here in our Bloomberg Interactive Broker studio. Max Abelson from Bloomberg News and Bloomberg Television. He's got the Business Week show that airs on Bloomberg Television all across our digital channels at Thursday night tonight, 10:30 p.m. Wall Street time. Max, thanks so much for joining us here. What do you got for us this week?
The pleasure is mine. I feel like it's a real Christmas treat to me that I get to come on the radio and you guys haven't kicked me off.
There you go.
We've got an episode on survival. I think that, I'm hoping that some of the episodes have had a kind of rainbow of emotion. Like, we've had some intense episodes. We've had some funny episodes. We've had some kind of philosophical, kind of deep episodes. But this one is like, I don't know, this one gets fraught. We have three very different kind of survivors, and one of them is Nadia Murad. I'm curious, have you two ever heard of her? You might not have. She won the Nobel Prize a couple years back. Listen, her story was difficult for me to read about in her memoir, and it was difficult for me to talk to her about. She was living in northern Iraq in a Yazidi community, and ISIS came and murdered men and children, and they took women captive, and she was taken into slavery, and she escaped. And she won a Nobel Prize for her efforts to try to end the use of sexual violence in wartime. And listen, I mean, her story is not the kind of story I'm normally talking to people about, but she is able to explain what she's been through and what she's working to do with such depth and such clarity. And it's, in some ways, it's a story about big business, because she and her attorney, Amal Clooney, just sued this very week a giant French conglomerate over its role in essentially working with ISIS, providing materials with ISIS. And her story is a story about fighting for justice, but not in the traditional violent ways, but in other ways. It was really wonderful to speak with her.
What about the other survivors?
Well, very different kind. It's a very different thing to survive a war than it is to survive a kitchen, for example. But Kwame Onwuachi is a really, really important young chef who, have you two been to, here's another question for you, putting you on the spot yet again. Have you been to Tatiana?
If it's a hot new restaurant, the answer is probably no.
It's considered one of the truly great restaurants in New York already.
Really?
It's in Lincoln Center. It's in the sort of the plaza, along with what used to be called
I've been to
Alice
Lincoln
Hall.
Center. I do get my culture.
All right. I'm glad to hear that. No Philistines here in this room. But Chef Kwame also has a fascinating story. He grew up, his family did not have enough money to survive. And he was a kind of, by his own account in his memoir, a kind of a bad kid. Like, he was sent by his mother to live in Africa with his grandfather, for which turned out to be for a couple of years. He started a huge, big deal restaurant in D.C. That was famous for being expensive, and it closed down after like 10 weeks. That restaurant did not survive. And now he has really hit the kind of the big time in a serious way here in New York City. And then our third person is not so much a survivor, although I guess Mark is a survivor in some ways. It's a guy who makes money when other companies are kind of on the edge of bankruptcy. And that's Mark Lazary of Avenue Capital Group, who was really at the forefront of figuring out how to make bankruptcy lucrative.
Interesting. So a very diverse set there around the theme of survival. So check that out. It's called The Business Week Show. It's on Bloomberg Television tonight, 10:30 p.m. Wall Street time. And then I'm just assuming it's out on all of our digital outlets as well. Max Abelson, he is a reporter with Bloomberg News. He's got this side hustle as a TV star, meeting these really interesting people, bringing some really interesting stories, interesting perspectives to a lot of really important topics here. So we appreciate getting a few minutes of his time. S&P 500 up 0.3%, so another positive day. All right, Sound On today with June Grosso from New York City. And that starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
The Supreme Court could reshape the 2024 election as it decides whether states can kick Trump off the ballot, whether he has presidential immunity, and more. The latest polls put Biden and Trump in a dead heat for the White House. The candidate in third place may surprise you. And Nikki Haley doubles her numbers in New Hampshire. I'm June Grasso, sitting in for Joe Matthew. That's coming up next. But first, a look at what's happening in the markets. Here's Charlie Pellet.
Hi, thank you very much, June Grasso. We have got the Dow, the S&P, NASDAQ, all advancing right now. S&P up 17 to 47.16. That is a gain of 0.4%. Dow Industrials up 107 now, up by about 0.3%. NASDAQ, the composite index, up 84, higher by about 0.6%. The NASDAQ 100 index up by 0.6% as well. Shares of Cytokinetics are soaring, up the most in more than 2 years after a report that 2 large drug makers are considering buying the biotech firm. This, according to Deal Reporter. Now, shares of Cytokinetics, they are up now by 22%. We've got the 10-year yielding 3.87%. The 2-year right now, 4.34%. Gold up $10 the ounce to $20.41, a gain there of 0.5%. And West Texas Intermediate crude down 1.1%, $73.39 a barrel. Bottom line here, stocks higher, sharp contrast to just about this time yesterday. What about the overall market environment? Given yesterday's selling and today's rebound, Eric Knudsen is Chief Investment Officer at Neuberger Berman.
We're looking to use volatility to move from cash into assets where we think we're going to get a higher return over the next 12 months. So I don't know about buying at these levels, but there are certainly areas within the equity market that are appearing increasingly attractive when you consider that the Fed, to a certain extent, is taking out some of the risks of higher for longer.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. So again, recapping, U.S. stocks are advancing. S&P right now up 20 points. That is a gain of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. Well, it seems there are more questions than answers after the Colorado Supreme Court's unprecedented and stunning decision barring Donald Trump from appearing on the state's March 5th primary ballot. President Joe Biden refused to weigh in on the decision, but he did say this.
Is Trump an insurrectionist, sir?
Well, I think certainly it's self-evident. You saw it all. Now, whether the 14th Amendment applies, I'll let the court make that decision. But he certainly supported an insurrection. There's no question about it. None. Zero.
And that was one thing that all the justices in the 4-3 Colorado decision agreed on. There was an insurrection, and Trump incited it. Joining us to weigh in on the many, many legal issues surrounding the election and Trump is Palm Beach County State Attorney Dave Arenberg. Thanks so much for being here, Dave.
Thanks for having me, June.
I'm going to start with a question that legal scholars have been debating for months. The Colorado Supreme Court decided, in your opinion, does Section 3 of the 14th Amendment bar Trump from running for president again?
Well, I read the 133-page ruling from the Colorado Supreme Court, and I thought they made some very compelling arguments. It's hard to argue from a substantive standpoint that he did not engage in insurrection. Remember, the standard under Section 3 is not that he be charged with insurrection, because no one's been charged with that. It's whether he engaged in it, whether he gave comfort or aid to the insurrection. And all the judges and justices, as you correctly pointed out, said he did. Even the judge at the trial court level, the district court judge in Colorado who ruled for Trump, found that he engaged in insurrection. But when it comes to the U.S. Supreme Court, I do think they're going to overturn this ruling. They want to. The 6-3 conservative majority does not want to bar Trump from the ballot. I think they're going to focus on procedure, perhaps say that due process was violated, that there needs to be some sort of mechanism set up by Congress, who is empowered under Section 5 to do so, to make sure that each state doesn't go its own way, where individual secretaries of state don't go rogue and target their political enemies. And so I think they're going to punt on the substantive issues. They're not going to touch insurrection, but instead they're going to find a procedural way out of this.
I agree. I would fall off my chair if the Supreme Court affirmed the Colorado Supreme Court. So now Trump is going to appeal to the Supreme Court, and I've lost track of how many times he's done that. I take it from your answer that you think that the court is going to take this place. They almost have to take it.
Oh, yeah, 100%. And, you know, like the district court gave the Supreme Court a way out if they wanted to say that Section 3 doesn't apply to the president. There's some dispute over that. Although I don't agree with it, because it would mean that the framers of the 14th Amendment intended to bar traitors and insurrectionists from lower level government offices, but not the top office. So, look, there are ways if the court wants to get out of this, but I think the best argument for Trump's side would be that his due process rights were violated because the Congress, based on Section 5, needs to establish rules. They have not done so. And if you allow each individual state to do so, it would create mass chaos.
And that was one of the dissents that went off on that. They gave a lot of ammunition, I guess, to Trump to appeal this decision. At the same time that Trump will be urging the Supreme Court to take up this Colorado case fast, he's asking them to slow down on the federal election interference case and turn down special counsel Jack Smith's request for them to decide the presidential immunity question right away. What do you think they should do here?
I think that the Supreme Court should expedite the matter. They know how serious this is, and they know that Trump's legal strategy has always been to delay matters. And this case was always going to get to the Supreme Court anyway, so why not get involved now? And so I think they will. But Trump doesn't, I mean, like he reveals his code. He reveals in his pleadings by saying, hey, don't expedite this. In fact, even on the gag order, he wanted that slowed down. He just wants to push this past the 2024 election so that he could become president again and order his attorney general to drop everything. But Jack Smith's onto him. Jack Smith is a step ahead, even when it comes to the case in front of Judge Chutkan in Washington, D.C. Jack Smith wants to provide Trump with discovery, the evidence and materials they have to move the case along, even while that case is stayed, which is paused, pending the Supreme Court's review. And Trump saying, no, I don't want this information. I don't want this evidence. I want this to be as slow of a process as possible. So, yeah, we all know what this is about, and so does the Supreme Court.
Yeah, we do. I mean, delay. And right now, you said, as you mentioned, it's on pause. The judge has put it on pause. But she says she hasn't given up the dates yet. She still has those dates. But does it look less and less like the March 5th date is doable?
It's unlikely. I think it goes in the first week of March. I think, though, if it does get postponed, and I think it will, it won't get postponed too much. I think maybe a month, 6 weeks. And it could push up against the May trial in the Southern District of Florida in front of Judge Cannon. But you know what? That trial ain't going before the election. So I think the only criminal trial that I really believe will go to trial before the election against Trump will be the Washington, D.C. case, because that case was built for speed. The other possibility is the New York trial, which is the weakest of the four, the one involving the Stormy Daniels hush money payments. That could also go to trial before the election. But I don't think there's a chance that the other two, the one in Fulton County and the one in front of Judge Cannon in the Southern District of Florida, go anytime soon.
Is Judge Cannon still sort of pretending that that trial is going to take place before the election?
You know, she said that it's still on schedule, but she's gonna revisit the deadlines as it gets closer. You know, that really hurts the whole cause of justice because, like, we all know that case is going to be moved. And as long as you continue to put it on the calendar in May, it prevents other cases from being scheduled at that time. We all know it's not going to happen in May, so move it now instead of waiting until the last minute. But Judge Chutkan ain't messing around. She is determined to have this trial heard well before the election, and so is Jack Smith. After all, that's why Jack Smith only pursued 4 counts against Donald Trump. He didn't pursue insurrection because he knew it would bog it down. He also had unindicted co-conspirators, which were not added to this case. That case in D.C. is only against Donald Trump because that case is built for speed.
You know, the Supreme Court has been under so much external pressure, so many scandals, ethical lapses, contentious decisions, and yet I was shocked that they decided to take the January 6th case that has implications for the obstruction charges against Trump. I mean, don't they have enough on their plate without getting involved in that case?
I was surprised by that, too. To my knowledge, only one judge ruled that the obstruction of an official proceeding did not apply to this case, and every other court has ruled the other way, that of course it applies. You don't need documents to be involved. You just have to obstruct an official proceeding. It is what it says it is. So I was surprised the Supreme Court took it up. And yes, it's a great point, June. They got all these other matters. Why bog it down? Because I think they're going to rule the way we expect them to rule, that, yeah, it's game on. You can use that statute. And if they don't rule that way, then it really does cripple all the prosecutions, not just against Trump, but against all the other J6 defendants.
So the court, with all these cases having to do with the election and more to come most likely, it's going to be put in the center of the 2024 presidential election in a way that echoes Bush v. Gore, a still controversial case from your state 23 years ago. Or is this even worse?
Well, you know, there's such a low estimation these days of the U.S. Supreme Court that, you know, you remember after Bush v. Gore was decided, it was a 5-4 ruling, and the justices went along political lines, and the public accepted it. Al Gore accepted it. Do you think the same would happen now? Not a chance. Trump is not going to accept it if it goes against him. His supporters won't accept it, and people on the other side of the aisle, the Democratic side, already have such a low estimation of the Supreme Court. They'll roll their eyes and say, of course, like, why is Clarence Thomas even part of the deliberations when his wife was involved with January 6th? And it is kind of laughable when I see people like Lauren Boebert decrying the Colorado Supreme Court as activist judges. You know what an activist judge is? It's when a judge rules against you, because conservatives and Republicans, they love activist judges when they rule on their side, like last year's Dobbs opinion overruling a 50-year precedent of Roe versus Wade. So when you claim activist judges, that's just hollow arguments for your own political echo chamber.
The same with textualism, I think, because, you know, the conservatives say with textualism, you come to the same decision. Well, they don't come to the same decision. They're split. The textualists are split sometimes on the court. So, you know, it really comes down to politics a lot. And it's a shame, but I think people see the Supreme Court as political now.
Well, and I understand why. You know, the public is smart. Chief Justice Roberts tears his hair out because he cannot understand why people don't respect the Supreme Court as an apolitical institution. But then when you have justices who take money and gifts from people who have interest in front of the court and don't report it, you know, when they're above the law, literally, where they create their own rules and they decide whether they violate their own rules. That doesn't seem like an institution that we should all, you know, be in awe of. That sounds like a political institution. And so I think there needs to be real reform on the court. And if Justice Roberts, Chief Justice Roberts, wants to decry the fact that the public doesn't approve of the Supreme Court, well, look in the mirror, because he could do things to change that.
Speaking of changing, and you referred to Justice Clarence Thomas, there are calls for him to recuse himself from any cases having to do with Donald Trump and, you know, the presidency. He hasn't recused himself very much in the past, and we just saw that Justice Alito, despite the pressure for him to recuse himself in a case where the attorneys in a major tax case did a fluff piece in the Wall Street Journal editorial for him, supporting him. He didn't recuse himself in that. You have any... What do you think? Is there any chance that Thomas will recuse himself? Any chance?
Not a chance. Not a chance. You can't shame the shameless. These guys have lifetime appointments. So why? Why would he give all that up? What, to please the editorial boards, to please the progressives who never supported him to begin with, he's all in. He and his wife are all in. They're part of a political movement, and I'm sorry, he's a judge, but you know which way he's going to rule, and he should be recusing himself. And it's not a good look for the Supreme Court. Same thing for Alito, and I would say the same thing if it happened with members on the left of the court. But there's a crisis of confidence with the U.S. Supreme Court, and they continue to thumb their nose at the public. And it really looks like a case of elitism, a privilege that they don't have to listen to what the public says. They've got their black robes. We all have to stand up when they walk in the room, and they can't be fired.
Just going back for a moment to the issue of presidential immunity. And at times, it might be surprising, but at times this court has turned Donald Trump away in the election cases and in other cases that he's tried to push them to take. On presidential immunity, I mean, that's an issue that if they decide it's going to be landmark, and it's going to stand not only for Donald Trump, but for Joe Biden and every other president that comes. How do you think they're going to rule on that?
I think they will reject presidential immunity, because otherwise we don't have a president, we have a king. I mean, that's why we left the crown, was because we didn't want to have a king. And so if it means that you can't indict a sitting president and you can't indict a former president for anything he or she did while they were president, then then this is not a president, and it sends a very damaging precedent, because then what happens is if Joe Biden decides that he does not want to abide by the election results and cancels the election and locks up Donald Trump, well, presidential immunity. So be careful what you wish for. It's not so funny what happens on the other side of the aisle, is it?
We'll see what happens when these cases come down. We're running out of time, but I just want to get your take on the Supreme Court. In other cases too, they're taking all these big cases, the abortion pill case, the guns cases, and it's all going to come down in June when people are campaigning for president and other offices. So they're looking for trouble.
Yeah. Yes, I think it's a boon for the Democrats, because the Dobbs opinion has been a huge benefit for Democrats at the polls. The Supreme Court doesn't get the memo from Mitch McConnell to stay quiet before an election. They're going to come out and do their stuff, undoing years of precedent, and it's going to be very unpopular. So that is a wild card we have not considered when it comes to the 2024 elections. That's something the polls are not indicating yet.
Thanks so much for being here, Dave. It was a pleasure. That's Palm Beach County State Attorney Dave Arenberg. Thanks so much. Coming up next, President Biden and Trump are in a dead heat in the race for the White House. Coming in third place is third-party candidate Robert F. Kennedy Jr. I'm June Grosso, sitting in for Dave, and you're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It is 1:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, and the NASDAQ 100 index all advancing. The outperformer, though, the Russell 2000. Small caps up again with that index. The Russell 2000 up now by 0.8%. To put it all in context, S&P up 0.3 by comparison, up 14 points. The Dow now higher by 73, up 0.2%. NASDAQ up 74, up 0.5%. The NASDAQ 100 index also up by 0.5%. Stocks are bouncing higher after data this morning signaled that the economy is heading in the right direction, cementing bets for deeper rate cuts from the Federal Reserve. Cintas shares are rallying after the provider of workplace uniforms reported better than expected fiscal second quarter results and boosted its annual revenue and profit projections. Cintas shares are up now by 0.5%. 10-year yield 3.89% with a 2-year 4.34%. Spot gold up $8.50 the ounce to $2,039, up 0.4%, and a retreat for West Texas Intermediate crude down 0.9%, 73.57 a barrel. Recapping stocks higher, S&P up 20, up 0.4. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Sound On Bloomberg Radio.
I'm June Grasso, sitting in for Joe Matthew today. Well, after the Colorado Supreme Court took Donald Trump off the primary ballot in that state, surprisingly, or perhaps not so surprisingly, Trump's rivals for the Republican nomination condemned the decision. Here are former New Jersey Governor Chris Christie and former UN Ambassador Nikki Haley.
I do not believe Donald Trump should be prevented from being President of the United States by any court. I think he should be prevented from being President of the United States by the voters of this country.
So I want to see this in the hands of the voters. We're going to win this the right way. We're going to do what we need to do. But the last thing we want is judges telling us who can and can't be on the ballot.
Joining me on our politics panel is Bloomberg Politics contributor Rick Davis and Democratic strategist Al Motter. Rick, does this reaction, and nearly all of his rivals had a similar reaction, does it surprise you?
No, it doesn't. I mean, look, it's an extraordinary thing, right? Whether you like the idea or not, it's extraordinary that a court, would get involved in a presidential election to the point where they're deciding who can be on the ballot or not. And regardless of how you feel about Donald Trump's insurrection, nobody had the expectation that he could be denied the presidency by anything other than a vote by registered voters of the United States. And so I don't think, Chris Christie is his worst enemy. Somebody who knows him well and hates him, spent every day of this campaign attacking him. And this outcome of this case has forced him to actually defend Donald Trump. So, I don't think anybody that I've met in the Republican Party and talked to since the Colorado decision thinks it's a good idea to deny ballot access to Donald Trump. And by far and away, that same group I've been talking to agrees that they should not have Donald Trump elected to the presidency. So it's actually been a really good thing for Donald Trump because everybody had to spend a day on the stump talking about how, he shouldn't be denied access to the ballot in Colorado.
Well, Democrats and a lot of liberal and even conservative scholars disagree with Republicans on that. Al, what do you think Democrats should be doing right now when they have this decision, when it's going to be in the news for some time to come, probably at the Supreme Court? What should their take be?
Look, this is a difficult needle to thread, and this is not a hot take on my side of the aisle, but I think this is a bad decision for our electoral prospects. I'm a big supporter of President Biden, but I think that this only energizes Republican voters. It makes the former president's case that he is a victim of deep state influence, whether that's accurate or not. I don't believe it is, but it certainly helps him make his case. And it makes his case that the entire legal system, in which, by the way, there are very legitimate cases proceeding against him, is biased against him and is unfair. And so it tarnishes other potential future convictions, much like Prosecutor Bragg's essentially nonsense prosecution in New York City is going to tarnish other possible convictions going down the road. So what should Democrats be doing? I think that what we need to do is use the underlying facts behind the Colorado case to highlight with independents, to highlight with never Trumpers in the Republican Party, to highlight with disillusioned Democrats who are thinking about staying home, and pointing out that this guy is in fact a threat to our democracy. That doesn't mean he should be kept off the ballot, but please show up and vote in November 2024.
You know, Rick, I've heard a lot of explanations for why the base and Republicans, you know, support Trump, and more as he has more and more legal troubles. And yet I still don't quite understand why it's so good for him, because doesn't at some point being a victim sort of wear thin on people?
It depends on who's victimizing you. I think Al points out a really important aspect of the Trump candidacy and what he has refashioned the Republican Party to embrace, and that is, you know, just the anger at the federal government and all institutions of government that voters believe are suppressing, repressing, overtaxed, under benefited, and he's tapped into that. I mean, the party that he is the titular head of today is not the same party that Abraham Lincoln, you know, Teddy Roosevelt, Ronald Reagan, and my old boss, John McCain, experienced, right? We have changed demographically. And with that demographic change, becoming more of a rural party, more of a white male party, it has changed the issue set. And it is basically, he's contorted the party into being anti-establishment, anti-institution, deep state, conspiracy theory runs totally through it. Now, we see the weakness in that. He's kind of stuck in the Republican primary at 40% in competitive states, and has the potential of even losing in New Hampshire right now. So it's only worked to a certain degree, but there's no question that the voters within the Republican primary reflect his view of how government is not working for them, but against them.
I want to turn now to a Quinnipiac University poll released yesterday. In a head-to-head matchup, 47% support Biden, 46% supporting Trump. So a dead heat, basically. In a three-way race with third-party candidate Robert F. Kennedy Jr., he gets 22%. Al, how has this anti-vaxxer gained so much traction? Is it just because voters don't like, or poll participants don't like, the other two?
Well, I think it's more than the fact that he's an anti-vaxxer. I think he has also tapped into some of these populist threads in our discourse and our politics that Rick was referring to. Also, his name is quite attractive to many. And for some disillusioned Democrats, they are taking a look at him. I'm not sure who he helps more, you know, in a general election, which is a little under a year from now. But it shows, I think most importantly, the dissatisfaction with the current choices. You've got, and it's not just him, you've got Cornel West out there, you have potentially a no labels candidacy out there, maybe a Joe Manchin, maybe a Larry Hogan, the former governor of Maryland. Voters are not thrilled with the Joe Biden-Trump rematch, and it's understandable. They're both, you know, older men who their best days might be slightly behind them. That doesn't mean the president isn't extraordinarily effective, but he doesn't sound as effective. Trump himself is beginning on the stump. If you listen to him, and this is going to be, I think, emphasized more by Democrats in the coming days, he's beginning to slur some words and sound incoherent at times and make misstatements, referring to the current president, for example, as President Obama. So I do think that voters are looking at these two and thinking, gosh, I wish we had another choice. And I think right now Kennedy's tapping into that. I don't think he will ever be at that number come November, but it is a reason for concern, I think, on both sides of the aisle.
Rick, do you want to weigh in on Kennedy gaining so much traction?
Yeah, I agree with everything that Al just said. I would add that, you know, the Bloomberg is doing a survey of the 7 targeted states, and it really matters in those states what's happening with Kennedy. And since that poll began in October, our latest survey in December indicated that he's improved, Kennedy has, his favorability rating by 5 percentage points without increasing his negatives. So he's actually been able to flourish for the last quarter, you know, at a time when campaigns are waging pretty tough attacks against one another, like Biden and Trump. And he's escaped all that and actually had his favorability go up. So it shouldn't surprise us that other polls are picking up a ballot move on his part. It's yet to be seen what impact he's going to have. But I would say, in general, Biden needs independent voters. And he needs them more than Donald Trump does. And so having somebody sitting on that ballot who is attractive to independent voters, and I would say that goes for Cornell West, too, in states like Michigan, that creates pressure for Biden that he's going to have to manage. And frankly, I'm surprised that the Biden campaign does not have a specific campaign waged against Robert Kennedy to try and increase his negatives and lower his ballot in some of these key states.
And we've all seen what third-party candidates can do when it comes to the general election. You two are going to stay with me. Coming up, Nikki Haley doubling her numbers in New Hampshire. That's coming up next. Now let's get a check on world and national news with Scott Carr in the Bloomberg 99.1 newsroom in Washington. Scott.
Thanks, and good afternoon. Rudy Giuliani, who led efforts to overturn the 2020 presidential election on behalf of Donald Trump, has filed for bankruptcy, swamped by legal bills stemming from his discredited campaign to keep Trump in power. Giuliani's now filed Chapter 11 in New York, listing debts of as much as $500,000. In December, Giuliani was ordered to pay $148 million to two 2020 Georgia election workers after promoting conspiracy theories about them. This as Donald Trump's legal team is urging the Supreme Court to hold off on intervening in his election obstruction case.
This is the case brought by Special Counsel Jack Smith, saying Trump conspired to overturn the 2020 election. Smith requested the consideration of Trump's immunity claims, seeking to ensure the trial can start on March 4th. Trump's lawyers are arguing there has not been identification of a compelling reason for the, in quotes, extraordinary haste he proposes. Trump has long said he wants the cases put off until after the 2024 election. This is the first Trump criminal case to hit the Supreme Court, and the court could rule as early as this week whether it will hear it. Ed Baxter, Bloomberg Radio.
A nonpartisan public interest research group is saying violent threats are being made on social media against those Colorado Supreme Court justices who issued a state decision to bar former President Donald Trump from the state's Republican primary ballot. The group Advanced Democracy says significant violent rhetoric's been aimed at the justices, often in response to Trump's media posts. Israel is showing the world what it calls a vast tunnel network underneath Gaza City created by Hamas. Israeli officials say it's included command and control centers. They're not confirming reports that they have started pumping seawater into those tunnels. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ 100 index, and the Russell 2000 all pushing higher. We begin with the Russell 2000 index of small cap stocks up 0.9%. To put that in context, S&P up 0.4%, higher by 19 points. The Dow up 121, now up 0.3%, and the NASDAQ Composite Index up 91, gain there of 0.6%. 10-year yield 3.89%, with a 2-year yielding 4.35%. Spot gold up $7 the ounce to $2,039, up 0.4%. And West Texas Intermediate crude retreating today by 0.8%, 73.64 for a barrel of WTI. Bottom line here, stocks are bouncing higher after data this morning signaled that the economy is heading in the right direction, cementing bets for deeper rate cuts from the Federal Reserve. And with more on the economic data, here's Bloomberg's Vinny Del Giudice.
A barometer of the U.S. economic outlook, the leading indicators dropped again. The index has been down since April 2022. Historically, such a long stretch would herald recession. The government also trimmed its estimate of third quarter economic growth. The labor market, however, is holding up with weekly jobless claims near half-century lows. Vinny Del Giudice, Bloomberg Radio.
Salesforce has won itself a new bull, with Morgan Stanley analysts predicting that the artificial intelligence wave will help propel the software maker's shares to record levels. Right now, shares of Salesforce, they're up by 2.1%. Recapping, stocks are higher. S&P 500 index up 21, up 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound on Bloomberg Radio.
I'm June Grosso, sitting in for Joe Matthew today. A new poll conducted by the St. Anselm College Survey Center at the New Hampshire Institute of Politics finds that former United Nations Ambassador Nikki Haley has doubled her support from 15% in the Survey Center's last poll in September. She's now at 30% with just over a month before the first in the nation primary. My politics panel today is Bloomberg Politics contributor Rick Davis and Democratic strategist Al Motter. Al, how much does this have to do with the New Hampshire Governor, Chris Sununu, endorsing Haley over his supposed good friend, Chris Christie?
I think it certainly helps. The Sununu name is gold in New Hampshire. But I would also note that New Hampshire has a particularly unique electorate. Their primary allows crossover voting. I remember when I was canvassing there in 2016 for then Secretary Clinton, I would encounter voters who told me they couldn't decide between her and John Kasich, and I would encounter voters who told me they couldn't decide between Bernie Sanders and Donald Trump. So I think that it's a state uniquely suited for someone with her message, and I wouldn't be surprised if she pulls the upset.
So, Rick, what is she doing right?
You know, I've had a lot of experience in New Hampshire, and, you know, sort of the god of New Hampshire Republican primary politics is John McCain. And she's doing a lot of what he used to do, which is going to town halls, you know, meeting with voters in those town halls, answering their questions, not giving sort of set answers, but really having a dialogue. As Al pointed out, New Hampshire voters are quite unique. They're used to being able to interact with candidates. And when they're denied that opportunity, you know, they punish you. And there's this great line that, you know, John McCain was going to see some voters. And he said, "Hi, I'm John McCain. I'm running for president. And I'd love to have your support." And one of them said to him, "Yeah, well, I've only met you twice. So, you know, hang out and I'll consider it maybe after the third or fourth meeting." And they really do believe that. They expect you to come see them. And she's done that, much more so than other candidates who've kind of placed their bets like Ron DeSantis in Iowa and hasn't spent the time doing on-the-ground work. I would say the difference here is she has connected with New Hampshire voters in a way that Chris Christie hasn't. He devoted himself to New Hampshire and you know, just hasn't connected the way she has. And so kudos to her. I think that she's got a lot of wind at her back. It'll be very interesting to see how this turns out, because right now I would say it's probably, you'd have to consider it a dead heat, because she has, as this poll indicates, been moving up while Donald Trump is literally where he was a year ago when this polling took place. And so her ability to add voters between now and the primary on the 23rd of January is already proven. Can she get enough between now and then to actually win?
So Trump still maintains a significant lead with 44%. Former New Jersey Governor Chris Christie is at 12%. Florida Governor Ron DeSantis' support all but disappeared. He's now at 6%. Al, do you agree with what Rick was talking about, that Haley can make up the really significant lead of Donald Trump?
I do. And look, Trump is very likely to win Iowa. Not sure by how much, but he's very likely to win. New Hampshire has a history of saying, hold on, what about us? And saying we have a different opinion, and upsetting the race in a number of historically significant times. I remember Hillary was out of it in 2008. All of a sudden, she stunned the world and beat Obama. And then it became a race all the way to the convention practically. So if I was a betting person, I would say it's going to be very tight and that she very well might win. And by the way, if she wins by more than a few points, that'll cause some consternation in the Trump camp. But he's still the prohibitive favorite. The one thing I would say about her that's really interesting from a macro perspective is if she were somehow able to win the nomination, that would be probably the death knell for Trump politically. If he were to be the nominee and lose to Biden, there's really nothing that stops him from just sticking around again. And, you know, back to the earlier discussion with your legal expert about keeping him off the ballot, the best way to end Trump's influence over the Republican Party and to a degree our country is to beat him at the ballot box, and really ideally to beat him in the Republican primary. Not sure if it's possible, but if anyone can do it, it's her.
Rick, I mean, beat Donald Trump, and he's lost the presidential election. During the midterms, his candidates lost, and yet he still has a commanding lead against his Republican rivals. I mean, would another loss even make a difference? He just doesn't seem to go away.
Yeah, look, I mean, we've talked about it a lot, but like he's got this core of support, let's call it anywhere from 30 to 45% within the party, right? It's not a majority. It's within the party is his core, and he uses that to better advantage than any politician I've ever seen to intimidate senior members of the Republican Party, to intimidate the media, to intimidate, the legal system. And he's not a majority candidate. He can't win a majority of the country. He hasn't proven he can get anywhere near that in a general election. And he's never won a majority of a primary other than in 2020 when it didn't matter. And so, he's a minority candidate in the sense that he is successful without ever getting close to 50%. And I agree. I think the best way to dispatch him from actively exerting his influence in the Republican Party is for someone to beat him in the primary straight up. I would say my concern about him is always he'll never declare defeat, even in a primary. He'll claim it's stolen. He'll claim he's the nominee of the party. I mean, like it's and if he does become the nominee, regardless of the outcome of the election in November of 2024, he will also claim that he's the winner. And so we have our work cut out in this country to try and create stable democratic institutions to handle a guy like him.
And no matter what he says, no matter how frightening it may be, for example, he's commented that he would be on day one a dictator. In that Quinnipiac poll, 53% of voters are concerned with that comment, but 44% aren't, and 84% of Republicans say they aren't worried about that remark. So it seems like it doesn't even matter what he says at this point or how frightening that may be. But more to come, as there always is. Thank you so much, both of you. That's politics contributor for Bloomberg, Rick Davis, and Democratic strategist Al Motter. Coming up next, we're going to be talking about just what has Congress done this term. It's going to be a short segment. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Shares of Cytokinetics are jumping the most in more than 2 years after a report that two large drug makers are considering buying the biotech firm. The company is seeing takeover interest from Novartis and AstraZeneca, according to Deal Reporter. Cytokinetics shares, they are up now by 22%. CarMax's third quarter results exceeded Wall Street expectations on strong profit per vehicle and cost cuts as it resumed a stock buyback program. And with more on the quarter at CarMax, here's Bloomberg's Denise Pellegrini.
Charlie, the Richmond, Virginia-based car seller is squeezing more profit out of fewer vehicles. While pandemic-related price inflation eased in the used car market this year, average transaction prices of around $27,500 remain well above historic norms. And rising interest rates have also been taking a toll on affordability for used car buyers. Those elevated prices have given CarMax peer-leading margins, but they've also hampered sales as buyers confront monthly payments beyond their reach. CarMax says its sales continued to be affected by affordability challenges in the last quarter due to ongoing inflationary pressures, higher interest rates, tightened lending standards, and lower consumer confidence. Of course, some of that could be changing as interest rates come down a bit, Charlie.
And that's Denise Pellegrini reporting right now. We do have CarMax shares up by 3.5%. Rival Carvana up now by 2.2%. China has signed off on the first direct delivery of a Boeing 787 jet in 4 years. Those are our top company stories. This is Bloomberg.
You're listening to Bloomberg Sound on Bloomberg Radio.
I'm June Grasso, sitting in for Joe Matthew today. Let's get a check on world and national news with Scott Carr in the Bloomberg 99.1 newsroom in Washington. Scott.
Thank you, June. A mass shooting by a gunman at Prague's famed Charles University has left more than 15 dead, including the assailant, in what a government official called the worst mass attack of its kind in Czech history. There's no evidence that the shooter, a 24-year-old man who killed himself at the end of the rampage, had any links to terrorism. Reports say that he was a student at the university. COVID cases are again on the rise. Experts say a new variant is driving infections.
It is highly transmissible, so as we head into the holidays, people are getting together. I worry we're going to see a pretty big surge in cases.
That's infectious disease expert at Baylor University, Dr. Peter Hotez, who says the new COVID variant appears to be adapting to current conditions.
The virus, unfortunately, just continues to keep evolving, and it gets better adapted to human transmission.
The good news, he says, is that current vaccines have been designed to fight the variant.
So if you take this new annual immunization, you should get some protection.
A new study shows a 70% protection against hospitalization. The bad news, he says, 20% of Americans have gotten the vaccine. Initial applications for unemployment insurance in the U.S. rose last week by less than forecast, staying near historic lows and indicating the labor market remains resilient as companies seek to hang on to their workers. Figures show that for the first time, claims for benefits climbed by 2,000 to 205,000 last week. Global news 24 hours a day and whenever you want it, and always with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg. Back to you, June.
Thanks, Scott. Coming up next on Sound On, Kaylee Lines. Kaylee, what is going to be your topic? Or topics, I should say.
Yeah, we have many to deal with, June, including some you've been speaking about this hour. I was listening to your great conversation with Dave Ehrenberg, the state attorney in Palm Beach County down in Florida, about what we saw out of Colorado earlier this week, the idea that Trump has been barred, at least for now, from the ballot in that state because of the 14th Amendment, and the idea that he's ineligible to be president because he engaged in insurrection. We're actually going to get the take from someone who sat on the January 6th committee in Congress, who produced a report that actually was referenced in that filing by the District Court in Colorado and then ultimately by the Supreme Court. Former Congresswoman Stephanie Murphy's going to be joining us, and I'm really looking forward to that conversation.
Now, it's amazing how politics and legal issues are just crossing so much, and I think we're going to see more of that as we get closer and closer to the election.
Yeah, definitely. And we're going to wade into that territory as well with a current congressman, John Garamendi of California, the representative there who's a Democrat, is going to be joining us to weigh in not just on the political potential ramifications of this decision and the Supreme Court decision that could follow, but also the idea that he's not in town right now. The rest of Congress isn't in town right now. The Senate finally left yesterday, and they have a lot of work that they just didn't get done and are going to have to get done pretty quickly in the new year.
And there again, you have legal, because immigration is one thing that they were trying to get a hold on. And right now you have the Texas governor, that state, going out on its own, passing a criminal law where they can arrest, the police can arrest migrants who cross into the state illegally. And that is going to be a huge, huge issue that'll probably also end up at the Supreme Court. It all seems to be merging.
It all seems to be going to the courts, June, which is, of course, perfect for you. But on the subject of the border, we're actually getting news on that today. John Kirby, who's one of the spokespeople for the National Security Council, is actually briefing reporters at the White House and says Secretary of State Antony Blinken, as well as Homeland Security Secretary Alejandro Mayorkas, is going to visit Mexico to discuss the border. This is not an issue the administration seems like it's shying away from. It seems like they feel this is something they really need to deal with.
They really do, because the numbers, they're reaching, first every day down there. There are so many people coming, and they're just nowhere to go. Some of them, though, the Texas is shipping some now to Chicago. Thanks so much, Kaylee. That's coming up next. The second hour of Sound On starts right now.
From our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself. Members of Congress would have a press conference every day if somebody would cover them.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Well, it's the week before Christmas, and all through Washington, not a creature is stirring. Not even the House or the Senate, because they've gone home. And they have a long to-do list awaiting them when they return to Washington. We're going to run through those issues with Congressman John Garamendi, the Democrat from California. I'm, of course, Kaylee Lines. Joe Matthew is out for the holiday. We're also going to be joined by a former Congresswoman, Stephanie Murphy, who sat on the January 6th committee in the House. And that report came up in the Colorado State Supreme Court ruling earlier this week, taking Trump off the ballot in that state. Plus, we'll cast our eyes abroad to what's happening in the Red Sea and the conflict between Israel and Hamas. Camille Arbit of the Atlantic Council will be with us. First, though, as always, we got to get a check on the markets, and Charlie Pellet is here with a look at that. Hey, Charlie.
Thank you very much, Kaylee Lines. We have got the Dow, the S&P, NASDAQ all advancing. We begin, though, with the Russell 2000 index of small cap stocks outperforming, up now by 1.1%. To put that in context, S&P 500 index up now by about 0.6%, up 26 points. We've got the Dow Jones Industrial Average up 160 now, up 0.4%. NASDAQ, the composite index, up 0.8%. The NASDAQ 100 index also up by about 0.8%. 10-year yield 3.89% right now, with a 2-year checking in at 4.35%. Spot gold up 0.4%. 2,039 the ounce. West Texas Intermediate crude down 0.8%. 73.64 a barrel. Angola has announced it is leaving OPEC following 16 years of membership amid a fractious dispute over oil production quotas. ExxonMobil shares lower right now at 101.27. We've got BP shares up 0.9%, and Chevron shares, they are down by 0.7%. Carnival higher after the cruise line company reported a narrower than expected adjusted loss per share in the fourth quarter. Carnival Corp shares up by 6.3%. Other cruise line stocks sailing higher as well. Norwegian up by 5.3%. Royal Caribbean up by 4.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you very much. Charlie's market check followed by the sound of almost deafening silence here in Washington because everybody's gone home. It's just me, Kaylee Lines, and Mike Dorning, who helps lead Bloomberg's congressional coverage, that seemed to be in the building or in the city today because Congress isn't here, Mike. They've wrapped up 2023.
Flown home for a nice 3-week holiday.
Yep, they got on their planes. They're taking the holiday break. But when they come back, they're going to have a lot to deal with because they didn't wrap up a lot of business
and not much time
before they got out of town. So let's talk about that timeline. They come back, what, January 8th?
January 8th and 9th.
And then January 19th, parts of the government could shut down if they haven't figured out appropriations. How hard is it going to be to get things done in that narrow a window?
Pretty hard. And there's wide disagreements between the House and the Senate. The House couldn't even agree among Republicans on what they want to do on a lot of these things, much less adding in Senates and Democrats in the White House. So it's going to be pretty hard to come to an agreement before this shutdown deadline. You have to figure the odds of parts of the government shutting down then are very high.
So is no work going to get done between now and then? I know everybody goes home to the districts for a holiday, but there were people who were here actively negotiating, at least on the Senate side, with the White House, trying to get something done with border security and Ukraine aid. Does any of that work continue, or they just pause everything and return to it later?
They say, quote unquote, that they're going to work around the clock the whole time, which is, of course, not really true. But some work will get done on that. There is a smaller negotiating group of about 3 senators who will be working and consulting, and they'll be in touch with the White House. But there probably won't be a lot done until you have the forcing mechanism of them coming back into session. Now, as you're pointing out, that's just one slice of what needs to be done. Soon. We're just looking that they're just dealing with the Ukraine aid and the border security. What they've got to get done by the 19th is funding a whole segment of government. And there's a big risk that even the Ukraine and the border aid stuff will slip into that bigger morass that will then get even bigger in early February when the rest of the government needs to be funded. So it's quite possible all of this could be kicking around a while. The optimistic view would be maybe they can at least get the Ukraine and border security piece done before everything falls apart. It's a possibility, but it's not necessarily a great one.
Okay, maybe possible, but low probability. Okay. When we're reflecting on the year that was in 2023, the fact that we are still fighting over top-line appropriations figures when this was the fight we were having back during the debt ceiling drama
almost a year
May
ago.
when they agreed on top-line figures, and we're still litigating the top-line figures. Are we just in for more of this in 2024, Mike? You make a deal and then you don't stick to it if you can make the deal at all?
Well, I think that there's a good chance that there will be a big conflict in January and early February, and that they will ultimately, perhaps with a government shutdown that might possibly go on a while, have a resolution to that at least until September 30th. Because Speaker Johnson has said we're not doing any more temporary stopgap measures like we did at the end of September and then again in November. And there's a logic to having your conflict now. If you need to shut down the government, you're doing it early in the year. Maybe Americans will have forgotten about it by the time they go, vote in November. Why do another extension if you're not going to make any more progress? At least this way you've gotten past acting like Scrooge and sending the government workers and the soldiers home without pay for Christmas. Now you're at least having the shutdown outside the holiday season.
All right, well, I guess they're going to enjoy their holiday season while they can before things get real difficult in a couple weeks here. Mike Dorning, of course, thank you so much for joining us. He helps lead our congressional coverage here at Bloomberg. But we want to get an inside look now from someone who sits in the House of Representatives, even if he's not physically in the Capitol building right now. Congressman John Garamendi, I'm pleased to say, is joining us. He is a Democrat from California. Congressman, thank you very much for being with us. When you return in January, is there just going to be so little time that the only thing really to do is hold your nose and swallow down whatever compromise can be come up with?
Well, let's just be very clear here. This last year, the 2023 year, was the least productive Congress perhaps in the last century. 23 bills, about half of them are naming post offices somewhere across the United States. The work of the government simply is not happening. The Chaos Caucus, otherwise known as the Congressional Republicans, are simply unable to function. They are so badly split, with the MAGA extremists on one side, a few moderates still left in the moderate side of it, and the rest of them all looking to their primary and wondering if they step out of line and make Trump unhappy in some way, then they will get primaried. It's a very, very serious problem when the Congress simply cannot function. Mike Johnson, the new speaker, is totally incapable of leading because he knows that at any moment, one member of his caucus could put his leadership at risk and call for a vote that is to vacate the chair. And so we're really stuck. Also keep in mind that what has been done, that is the funding of government through the first year, has been done principally by the Democrats. We put up 2/3 of the votes. We put up our 200 or so, and then the Republicans add on. And so it's just a terrible situation. And frankly, it is not going to get better. The margin for the Republicans has actually declined. We see further members of the Republican caucus retiring mid-year.
Yeah.
Kevin McCarthy being the primary example.
Kevin McCarthy, George Santos, of course, is out. To your point, Congressman, though, on Democrats having provided the majority of the votes for some of the most crucial must-pass bills this year, when it comes to a vote that you could be facing potentially early on in 2024 on the supplemental, something being negotiated between the White House and primarily the Senate right now, Ukraine aid in exchange for border security measures, potentially changes to asylum and parole rules. What are Democrats going to be able to tolerate in those negotiations?
There is a compromise available. In that supplemental bill, there's almost $3 billion for border security, hiring border patrol agents, court, and on to deal with the crisis. There are, within the Republican proposal, my analysis is there are some things in the Republican proposal that could be part of a deal. They'll probably need to be modified in some way, but nonetheless, a deal could be had. But on the House side, there are no negotiations at all. Speaker Johnson has not put forward anybody in his caucus to negotiate. But we're willing to do so. We know that we can get it done. The problem for Ukraine is absolutely horrible. They will be out of money the 1st of January. They will not be able to pay for their first responders, the medical services, the ambulances, and the military equipment that they need to continue to defend themselves and to push back Russia is not going to be available. They're going to have to limit their munitions. They're going to have to be able to just hang on. The United States Congress is absolutely derelict in providing the support that is essential for Ukraine. Keep in mind that Ukraine is fighting on behalf of NATO. We are all NATO allies protected by Ukraine. It's the Ukrainians that are dying. It's the men and women and children in the cities that are being bombed by Russia. And what is the Congress? What are the Republican leadership doing? Nothing. Not at all. A compromise is available. But we're seeing total chaos in the leadership of the House on the Republican side. We stand ready. The Democrats stand ready to put together a compromise. The Senate, we'll see if they could do it. If they can, then perhaps we'll get it done. That's just one of the pieces. The funding of government half of the government will not be funded on January 19th. There'll be no money.
Yeah, that deadline is quickly approaching. Yeah, that deadline is not far away, Congressman. Of course, when we think about the supplemental in particular, though, it's not just Ukraine aid that's in question wrapped up here. It's Israel as well. And I just wonder if the Israel aid and just the administration's support for Israel is also going to be harder to support going forward when we're looking now at Palestinian casualties that authorities in Gaza say have reached over 20,000?
The Gaza situation is horrible. It's inhumane and it's just horrible. My view of this is that Israel absolutely has to stop aerial bombardment. Most of the casualties are a direct result of aerial bombardment. Most of those bombs are American bombs, and it has to stop. About 40% of those bombs are not guided. They simply fall out of the sky and hit something. What they're hitting are the civilians, and it has to stop. Israel has every right to continue to pursue its goal of eradicating Hamas, and they should do so. But they absolutely must do it in a different manner. They cannot continue to do this. Their support is rapidly eroding around the world, and I would dare say it is also in Congress. Now, humanitarian aid is also in the legislation, and that is essential. We're seeing the need not only in Gaza, but also in other parts of the world, Ukraine specifically, and that's another piece of this puzzle. Now, we have work to do. We can do it. We must do it. We have no choice. And the supplemental Ukraine, Israel border, as well as the humanitarian support, is necessary. Also, we need to understand that we have to continue to fund the government. Your reporter from the Congress suggested that a CR is not going to happen. Well, if a CR doesn't happen and the appropriations don't happen, then government will shut down, and it will have a horrendous effect on America, not only on the operations of everything from the air traffic control systems to highways, other essential programs. The military will probably continue to be paid, but the police will not. It's a terrible problem if we don't continue to fund the government. And finally, the status of America in the world has already been seriously jeopardized by the unwillingness and the inability of the Republican-led Congress to operate. Right now, Putin is having a very, very good Christmas holiday because he is simply laughing at America. And he's telling the world, you do not want America as your ally because they will back away. They will leave you in the field without guns, without ammunition, and without the supplies you need. Putin's having a very, very good Christmas. Ukraine is not. And America is suffering as a result of the inability of the Republican-led Congress to get the job done.
So there's a lot to unpack in that answer there, Congressman. I want to combine a few issues that you mentioned here. You talked about America and its standing in the world, the U.S. military, whether or not troops will continue to be paid. And we were originally talking about the conflict between Israel and Hamas. There's one thing that kind of bridges a lot of this, and that is what we're seeing happening in the Red Sea right now. Obviously, there is a lot of naval vessels in that region. The U.S. already has been actively engaged in defensive measures, shooting down Houthi drones as they are attempting to strike merchant vessels bound for Israel, or perhaps it has become a bit more indiscriminate now. How concerned should we be by what's happening in the Red Sea? And I ask you this knowing you serve on the Armed Services Committee and the Transportation Committee, the subcommittee on maritime transport in particular.
Well, it is a very, very serious international problem, but it is not a new problem. We've seen periodically the interruption of shipping, both in the Red Sea. Years ago, it was the pirates taking over ships. Obviously, problems in the Gulf also. So this is not new. America has always been there, and we are there today. We're calling on allies, other countries, some of whom are NATO, others are not NATO countries, to join with us in providing the necessary naval support to make it clear to the Houthis, and more importantly, to Iran, that they cannot interrupt the international flow of shipping, not only oil and gas, but also all kinds of goods that are shipped through the Red Sea and the Suez Canal. It's important that the United States does this. We do this all the time. We have been the leader since the Suez Canal crisis way back in the 60s We've been the leader in the Middle East, providing the stability and the support for the open seas. We'll continue to do that. Now, there is a problem here, and it takes us back to the funding of government. We are using very expensive missiles, a couple $1 million a missile, to shoot down $2,000 drones. It's not a good situation. Those missiles cannot
if I
be
could
replaced. Yes, go ahead.
Well, would it be more strategically optimal for the U.S. to instead use its ammunition to just go after the Houthis directly, direct strikes where they are, or is that too escalatory?
Well, it's certainly escalatory, but we might want to talk to the Saudi Arabians who attempted to do that for 9 years, unsuccessfully. The Saudis used American equipment of all kinds to try to do precisely that, is to stop the Houthis and to remove their military capability. They failed. Now, would we be more successful? Probably not. What we need to do here is to be there, to do what we can do, and it's difficult because of the asymmetry between the cost of the missiles that we're using to defend and the drones that are being used by the Houthis. The real issue here is Iran. All of this goes back to Iran. And clearly the Houthis are supported by Iran. Those missiles are Iranian missiles. The drones are Iranian drones. And the issue of Iran remains front and center in most of the issues. Certainly the Hamas, that's Iran. Further north in the Lebanon area, that's Iran. Syria, that's Iran. The current attacks that are going on against the American military in Iraq, that's Iran. So we must recognize, and we do, that Iran is the central cause of most of the disruption that occurs in this region. How to deal with Iran? We were on a path during the pre-Trump administration, the Obama administration, to rein in Iran on their nuclear and other activities. Unfortunately, Trump terminated that, turned Iran loose to pursue its nuclear ambitions and simultaneously to continue to pursue its ambitions to dominate the Middle East. So this is a very difficult but a very, very important one. The show of force by multiple countries is extremely important. Will it stop it? Well, let's hope it does, because the alternatives are just not good. The alternatives being perhaps trying to attack the Houthis. I suspect that will ultimately be unsuccessful. The negotiations between Saudi Arabia and Iran are on a hold because of the Hamas attack on Israel and then Israel's attack into Gaza. But those may be able to bear fruit in the days and months ahead. Hopefully it will.
Congressman, finally, I want to return to another issue that has been in the headlines. It refers to someone you were actually just alluding to there, speaking of the Trump administration, the former president. The Supreme Court in the state of Colorado, of course, ruled earlier this week that he is ineligible to be president again because of his actions on January 6th, in what they say was inciting an insurrection. He would be removed from the ballot if this holds. Now you have the lieutenant governor in your state requesting that the state look into every legal option to do the same. Is this appropriate in your mind, or is the issue of whether or not Trump should serve again one that should be left to voters, not the courts?
I think every state in this nation should pursue this. However, and this is a big however, I believe the Supreme Court will overrule these individual state actions and allow Trump to stay on the ballot. Two good things if this were to happen. First of all, multiple states would take up the issue of the insurrection that Trump created and hold him accountable state by state. That would be good for the American public to know this is not just a Washington thing. This is something that states across this nation are observed and are taking action on. Ultimately, I believe that Trump should be given the chance to be on the ballot, and I suspect the Supreme Court will so rule. Were that not to happen, I believe we'd have a very serious, very serious political crisis in the United States if, in fact, Trump were not allowed to be on the presidential, on the ballots in November. Between now and November, let the states act. Let them go through the process, as did Colorado, and put the proof on the table, which Colorado did. And I believe other states should do that. Ultimately, I think the Supreme Court will say, no, that can't happen that way. Trump will be on the ballot. And he should be defeated for multiple reasons. He is a direct threat to our democracy. He's already talking about being a dictator, for only one day. Well, that would be the first dictator ever that was there for only one day. But this is a very serious threat to our democracy in multiple ways, and this is complex, as I've described it. But I think ultimately, the states should take it up. They should come to a conclusion, and then ultimately the Supreme Court should take it and allow Trump to go on the ballot in November.
Well, Congressman, I really appreciate you weighing in on the complexity, not just of this issue, but of issues of foreign policy as well. Thank you so much for joining us. We really appreciate your time. That is Democratic Congressman John Garamendi of California. We want to, though, briefly go from the world of politics to the world of financial markets. Get a check on what's going on with Charlie Pellet. Hey, Charlie.
Thank you very much, Kayla Lyons. We got the Dow, the S&P, NASDAQ all in the green, holding on to gains after data this morning signaled that the economy is heading in the right direction, cementing bets for deeper rate cuts from the Fed. Here's where we stand. S&P up 24 right now, 47.22 on the S&P 500 index, looking at a gain now of 0.5%. The Dow up 151 points, up 0.4%. The NASDAQ Composite Index up 109, up 0.7%, while the Russell 2000 Index of small cap shares is outperforming, up now by 1.1%. 10-year yield 3.88% with a 2-year 4.34%. Gold up 0.5%, 2,042 the ounce, and West Texas Intermediate crude now down 0.6%, 73.81 a barrel. Nike will be among the names reporting today after the close of trading. Again, recapping here, stocks higher, S&P up 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lyons on Bloomberg Radio.
All right, well, we want to return to a conversation we were just having in regard to what is happening in the Middle East. There have been renewed talks in recent days, attempts to broker a deal to release more hostages being held by Hamas. But Hamas has said in the last 24 hours it would not discuss a new deal to release hostages until, and this is a quote from their statement, there is a comprehensive cessation of aggression. This is, of course, as Israel is stepping up its operations in Gaza. So we want to get more on this now. I'm pleased to say joining us is Carmel Arbit. She is joining us from the Atlantic Council. She's a senior fellow there and focuses specifically on the Middle East. Carmel, we've spoken with you before here at Bloomberg on our TV program, Balance of Power, and you suggested that once that first brief deal to halt hostilities for a period of time and exchange hostages expired, which of course it has, it would be much harder to make a second deal happen. Do you still feel that way, or do you think there is actually potential for another agreement here?
Thank you so much for having me on again. I do think there is potential for a deal here, and I think that actually the parties are quite close, and I believe that for a few reasons that we can go into. But this will be a much more difficult deal, specifically for the Israelis, insofar as they received in the first ceasefire an exchange of a ratio of about 1 to 3 hostages for Palestinian prisoners. The prisoners who were released had very low level, or in some cases no crimes, hadn't been charged at all. And that largest swath of prisoners that, or excuse me, of hostages that released from Gaza were youth and elderly women. The situation that we have now is that Israel has already said publicly that it is willing to engage in a ceasefire for 7 days in exchange for 40 hostages, about half of what they got last time. And the demands from Hamas are expected to include prisoners who have blood on their hands. And so what that means is prisoners who are kind of high value, who have been involved in serious or significant crimes, which will in and of itself be a much higher price that Israel will have to pay.
Well, in the meantime, while they're trying to work out whether or not there can be a deal that's made here, as I said, things are escalating in Gaza. The IDF, it seems, has found more Hamas centers, it says, in the Strip right now. And the civilian death toll, at least according to Palestinian authorities, has surpassed 20,000. I was just speaking with Democratic Congressman John Garamendi of California, who said Israel needs to stop this, basically, to paraphrase